Alrighty. Alrighty. Let's see here. Alrighty. Let's see here. Forgot my coffee. Okay, so volatility is down a little bit right now, and we have the S&P 500 is down as well. And across the board, let's take a look at what is up and what is down. So right now we have KMPH is up a little bit. GameStop is up $6. U.S. oil is up $1.07. We have oil per barrel up $1.12, so that's why U.S. oil is up, the ETF. Cinemark is up 26 cents. Oshkosh B'gosh, $1.15. That's Oshkosh, the manufacturer, vehicle manufacturer. And palladium is up 10%. Taking a look at what's on the downside, AMC is down 35 cents. AMD is down $3.27. So not a great start to the market today, with quite a bit in the green quite a bit in the red. Let's take a look at what is this. Check the heat map. Here we go. Now let's drag that over here. Oops, here we go. Hey. So the heat map is delayed by just a couple minutes, so we'll wait for that to come up. So in the meantime, let me get this thing ready to go here. Boom. And there we go. Weird. All right. Hey, why is this one over here? Oh, I think I switched chords. That's why. All right, so we're gonna put. Leave it. Leave him alone. Go back to bed. Dog wants to know what's going on. All right, I gotta change a connection here. So give me one. Actually, I think I can do it through here. Let's see. Okay. Oh, there we go. All right. Now we're in business. All right, Liberty. He's not awake yet. Okay, here we go. All right, so on bottom you can see the S&P 500 is trading down 50 points right now. And let's take a look at the Dow. And Dow Jones Industrial Average is down 121 points. So looking like another pretty solid red day as the sell-off continues from really all week. So what to do in a case like this is pretty much don't panic. It looks like some of the symbols either haven't opened yet, or I'm having problems with my trading software. That's what it is. So some of these are still showing pre-market. So unless they haven't opened up yet for some reason, we'll figure that out here in a little bit. But yeah, this is really odd. I don't think I've had this happen before. All right, so we've got about 20 minutes until the market opens. Everything's trading pre-market right now. So in the pre-market, you have AMC is down, set to open 26 cents lower, but it's starting on a small upswing. So this is all pre-market. So this started basically 5 hours ago. And let me go out to the 5 minute here. And so you can see where we closed at yesterday, and it dropped some more, and now it's starting to come back a little bit. So the first hour of pre-market trading went down. Now it's starting to go back up again. Could be an interesting sign. Let's see the markets that are open. We got Bitcoin, or Bitcoin, or whatever you want to call it. Bitcoin is down about 800 points or so, so $800. Each Bitcoin is trading about 49,500 right now. And it looks like volatility on that is somewhat declining just a little bit. Remember, we were at, I think, 50,600 on the close yesterday, so that is definitely a little bit lower than where it was, 1.7%. Again, when you see the times on here, or when you see the highs or the lows, this drop here is based on what's happened since midnight. So I don't know the exact time that resets. For me, I think it resets at midnight, so it might be different in yours. I don't think so, though. Ethereum is down 77 cents, and let's see what's going to happen with those two today. So interestingly enough, we'll go to the meme stocks. GME, GameStop, is trading up $1.80 in pre-market, $1.90 now. Again, we got 20 minutes until the market opens, and so I need to go into where's it at here? And I don't see what I'm looking for in here either. Interesting. Okay. All right. So some of the ones we're looking at: GameStop, AMC Entertainment is looking to trade. It's trading down 33 cents in the pre-market right now. Again, this quote here is based on what it closed at yesterday, and this is where it's at in the pre-market, where it's trading at right now. So that's where we're at on those two. Let's take a quick look at Rocket. Again, Rocket had a huge decline yesterday. It's probably going to continue to sell off today, and it is. It's down 33 cents in the pre-market. And let's see here, Palantir. Palantir is actually up $1.19 in the pre-market, so that's pretty good. So we have some upside today. In the precious metal markets, we have silver is open right now, and that is trading down 10 cents, $25.95. So this has been actually on a slow decline a little bit. It doesn't really look like it, but from where it topped out at basically 29th of January, it's been on a steady decline. You had a little bit of an upswing here. So this is actually good here. If it can hold this area here, it looks like we've got support going all the way back to September of 2019. September of 2020. And then if it does drop, it might go down to another dollar or so in this consolidation phase that it's in. But it's actually looking not that bad from the standpoint of where can it go going forward. So there's a lot of people thinking that there is a silver squeeze on right now, which is basically buy as much physical silver as you can so that it forces the places like the COMEX, it forces ETF funds like PSLV, those that claim that when you buy shares or you buy silver from the COMEX and you use them as the custodian, in other words, you own the silver, you can go pick it up anytime or you can have them mail it out to you. But there's a big suspicion that the silver held in the COMEX is basically given out to A, B, C, D, E, that they don't hold the actual physical amount of silver that they're supposed to in full custody for their customers. Can't be proven, but the only way is that if you go in there and say, hey, here's my information, I will take my 100 ounces of silver that I have here, and I'll be happily go on my way. If they don't have it, or they say, well, you can't just do that right now, we need a couple weeks to do that, and you're like, your warehouse is right there, go get me my silver. Well, it doesn't work that way. There's a lot of suspicions that the silver that's held there isn't all the silver. I can't say yay or nay. I don't have any silver custodied there, but that's what's interesting going on with that one. Looking at a couple of the other ones, let's switch songs. That's a goofy song there. Let's try this one. Okay, so we had silver there. Let's take a look at what platinum and palladium are doing. Platinum 1158, and then palladium 2360 is where those two are trading at. So let's go back to Rocket for a second, because that's been one of the high flyers out there, and it's showing down 33 cents. And this had a huge run up, right? Got all the way up, topped out at $39 or whatever it was, and then on Tuesday, and then a slow decline all the way to where we're at right now in the pre-market. Again, this is an hour chart, so an hour means that each bar or each candle, these are called candles, these represent 1 hour. So if I take it down to 30 seconds, or 5 minutes, I'm sorry, if I take it down to 5 minutes, now each candle represents 5 minutes, so the chart looks a little bit different, right? So now you can see, oh yeah, that's a huge downswing. So looking at 1 hour, you're like, well, that's not so bad. Well, it is if you're coming from all the way up there, all the way down to where it's at right now. So that's what's going on with those two. Tesla, popular high flyer, is looks like it's going to bounce up a little bit on the open. That's good news. And again, we'll check the heat map as soon as the market opens. So this is something that if you're looking for sentiment on the day, you can take a look and say, okay, so what are these going to do? They're all showing zeros right now because the market isn't open. Once the market opens, the colors down here will show you whether they are up or whether they are down. If they're mostly right around the money, they're right around 0% or so, it'll show there. If they're trading up 15%, 20%, 25%, they'll show this shades of green and red. So this will give, this is the S&P 500. You can do it for other ones as well. You can do it for the Dow Jones Industrial Average, etc. But the S&P 500 is a good sentiment indicator for the overall market as far as what is going on. So down here in the bottom, what we have down here is we have the S&P 500. The S&P 500. And then the other one right below that is called the VIX. Now, the reason why the VIX is important is you can call that one basically fear factor. That's what I call it. I call it fear factor. Excuse me. And the reason I call it fear factor is it does represent negative sentiment in the market or positive sentiment in the market. So what you look at is down here, and if I change this over to a 5 minute, you can take a look at yesterday where volatility increased. So as this increased throughout the whole day, the S&P 500 went down. See how they're inverse of each other? One goes down, one goes up. And there's people that trade the VIX. There's people that trade this and look at what's going on as far as in the market, as far as sentiment goes. I don't necessarily do that, but it is a play that many that not, I don't know about many, but a lot of people do, where they'll put money into the SPY, which is the ETF index one. And you know what? I need. Let's see here. This music today is kind of goofy, isn't it? Let's try something else. Heavy and ponderous. One song. Oops. What the heck? There we go. All right, we'll try that one. All right, so I'm going to get up my trading software here and get that ready to go. And I hope you're all having a good morning. Make sure if you are on a computer and you're looking at stuff today that you hydrate up through the day. That's very, very important. Stretch your legs out from underneath you if you're sitting in front of a screen. A lot of people get blue light glasses, and they wear those while they're streaming or while they're looking at a computer, and those can help on the eye strain side of things. So also one thing as far as your eyes go, every couple minutes or so, take a look at something a little further away and focus on it for 15-20 seconds. Blink really fast, and give your eyes a rest as well, and that can help things also. Okay. All right. Let's see here. All right. So. Okay. I have to put in my ID and password. Fill in description. Oh, what happened? Okay. So again, we've got about 20 minutes left before the market opens, and let's take a look and see where the Dow and the S&P is looking to open. So the Dow mini futures, you can look at that on your screen right now, is up about 19 points. So what that means is when the market does open here in 10 minutes, it's looking at a slightly higher open. And then if we look at the S&P Mini 500 futures, those are down 6.25. So things like the VIX, things like the Triple Q, those are all going to be interesting to watch today and see if this negative sentiment continues. If we take a look at let me see what Boeing is planning to do on the pre-market. All the airlines were up yesterday. Financial sectors were up yesterday. Boeing is, look at this, 1.68% move already pre-market. Boeing is up $3.84 in the pre-market. So look for that one to open up higher as well. Don't see any other major news out right now. This music seems a little bit better. And let's see here. Oops. Okay. So let's go back to the futures. We got 8 minutes before we open here. And it looks like, yeah, S&P 500 looking to open down a couple points. All right, let me go over here to end, return, paste, and I'm going to save this. There we go. All right, so again, the S&P 500 is looking to open up a little bit lower today. The Dow Jones Industrial Average is looking to open up a little bit higher. Again, we had stocks yesterday, like the airlines were up. Let's see, like Southwest Airlines, they're looking to go up 6 cents on the open. You have Boeing looking to open up quite a bit higher at $4.64, 233, and they're starting to get more orders as the economies of the world start to open up. US UK suspend tariffs and seek aircraft row resolution. So there's your news on Boeing. Let's see here. So what they're doing is they're buying time, right? So we have the tariffs in place, and this goes back and forth between Airbus in Europe and Boeing in the US. Boeing is the largest United States manufacturer, hands down, case closed. Okay, so last year that should have put a huge dent in our overall market. It did not, however, as we recovered off of the March lows of 2020. So let's take a look at this. United States agreed to a 4-month suspension of retaliatory tariffs imposed on British goods such as Scotch whiskey over a long-running aircraft subsidy row, with both sides pledging to use the time to resolve the dispute. So the fact that these tariffs are now over and they're giving a 4-month delay before they kick back in, they're buying time. And the reason they're doing this is that, when you have a pandemic going on and you have a bunch of stuff that isn't being shipped anyway, depending on the product or the commodity, I don't know how much of an effect the Scotch whiskey had. It probably had more of an effect on Boeing and other aircraft. So what this means is this is going to open up the opportunity for airlines that are in Europe and based in Europe to now place orders for the 737 MAX and or the 777 and or the 787. Now the 787 has been having some problems, as have the 777s, the 777s, the low series, the 200 series. They've been having some problems, and they're trying to get those straightened out. But all aircraft manufacturers have problems here and there. So that's trading up nicely in the pre-market as far as that goes. If we look at Alaska Air Group, ALK. So they're looking to trade down 9 cents. Take a look at United. United looking to trade up 13 cents. And Southwest. Oops. And AAL, that's what I thought. And American Airlines is looking to trade up pre-market 16 cents. So again, as we get closer to the open here in 4 minutes, we have the S&P 500 futures are trading down 3.5, 3.5 points only, and the Dow Jones Industrial Average is looking to open up 18 points. So that's pretty good. Hopefully we'll have a little bit of positive sentiment in the market today and look for a reason for people to buy. The problem that I see with that is that when you have all of this red that happened yesterday, all this red that happened the day before, look at a company like Nvidia, which is looking to trade lower again by 26 cents, but that's not a lot. But if you take a look at what's been happening with that company, let me remove the externals, and it's just a slow decline from when they reported their earnings, and overall a slow decline off of their highs, which were achieved back in middle of February. So it's something that, when you have this negative sentiment in the market and people still have profits, they have their financial advisors and everybody else telling them, hey, take some of that money off the table. Yeah, but I'm down 20%. Down 20%, but you can still keep you're 12% profit. Sell some now, right? And it depends if you need the money. If you don't need the money, let it ride. Keep it there. This is not financial advice for your particular situation. I do not give financial advice. I give opinion, and I'm here to educate and hopefully have you all learn something as well. So if you have a question, feel free to post it down in the chat below, or you can post it as a comment either way if you're over on YouTube watching this, and I'll be happy to answer any questions you might have. So another 2 minutes to the bell. There we go. Nice clock up here. And today's Thursday, March 4th, 2021. We have 2 minutes before the bell, and I think if I click this, yeah, that goes away. We can pull that up. So about a minute and a half left. Oh, but I do want to go on to the, let's take a final look for the futures here. Okay, and KMPH, forgot to check that one. Down another $2. So if you got into that, great, good for you. Again, as we talked about yesterday, it is consolidating here. So we'll see what happens with this one today on the open here. So we'll okay, so less than a minute. Oh, 50 seconds. And hopefully, again, hopefully we'll have a green day. We could certainly use a green day after all the volatility we've had. We'll be looking at the volatility on the open here. Again, these are 30-second charts of the S&P 500 index, as well as the volatility index. And I might put a mini chart or a ticker. I might get a stock ticker and put it down here as well. And we might catch some flyers that way. So I'll be adding some things to the stream. Maybe we'll move this somewhere and put a stock ticker in the middle. But usually most stock tickers go at the bottom. This might be a little bit too much. All right, so here we go. S&P is opening up and it's dropping down 1.21. Again, our buy sell indicator says buy, but what it really means is sell. So that's down right now. Let's check the Dow Jones. Dow Jones Industrial Average up 47.9. Again, those are going to be the your airline stocks. Those are going to be your financials. That's going to be driving that open. If we take a look at least my watch. Oops, where's my watch? There we go. Some of the ones we've been looking at over the last couple days. Let's see what's opening up higher. Palantir is up 4% right now, up $1.08, 4.7. So that might be an interesting one. Let me go over to the 30-second chart so we can actually see the candles and see what's going on. U.S. oil up 70 cents on the open. So again, right off the open, you see these couple candles here for 30 seconds over the last minute or so. It's still up over yesterday. So I don't know if I would put much trust into this sell indicator over here based on the fact that you had oil per barrel being up $1.09. So with oil being up right now, not necessarily a bad thing. So right now we have the S&P up 1.44 points. We have the Dow Jones Industrial Average up 71 points. And we have the NASDAQ Composite Index down about 6.5 points, but that seems to be changing as well for the positive. Oops, hey, that's supposed to be QQQ. Okay, so now we're positive on the Q. So that's a good sign as well. So off to an okay start as far as the markets go. So hopefully that will continue. Rocket is actually up 79 cents right now. Ethereum, Nvidia, nice jump there. Nvidia was trading down, I think 18 cents, 28 cents, or 14 cents, somewhere like that, something like that, right before the market opened. So 1% rebound that's going to turn a lot of the markets green. Let's see if the heat map showed up yet. Not yet. I think that's a 5-minute delay we have on this one. I'll refresh that anyway to see. Yeah, so that'll pop up. That's on a delay, but that'll show you sentiment as well. So NVIDIA, nice run, nice rip on the open, up a quick 1% on the open, so that's good news there. Let's see what some of the other ones are doing as far as the chip stocks go. AMD up a little bit, 32 cents. Let's take a look at Intel. There you go. And again, NASDAQ Composite. Okay, I see you. 0.3%, 39 points. Microsoft is going to be up a little bit also, shown there. 44 cents, 47 cents. But it looks like people are plowing back into NVIDIA a little bit. Nice little run up at the open. Let's go out to a bigger chart and take a look at what we might be looking at out of them today. If I eliminate the external and just take a look purely at yesterday, you know, you got the VWAP or I'm sorry, the 50 and the 200-day moving average all up here. This is volume weighted average price, or called VWAP. A lot of people trade on that, and they'll say, hey, if you're looking for it to go up, you can buy it below the VWAP if these two lines are down here and they cross. This is volume right here, or this is the MACD indicator, convergence, divergence, and then you have volume listed down here. And actually, I apologize because I did a new chart. One chart default. Oh, there we go. No, we got the right one. And it's showing a buy on NVIDIA at this point. So buy signal is out of 334, so pulling back just a little bit. All the major indices are in the green today. We have the Dow Jones up 100 points. We have the NASDAQ up 41 points and the S&P 500 up 10 points. So off to an okay start. Looks like a lot of green over here. That's good. Let me look at my big chart. I call it Schwab. And let's look at some of these movers over here. Yeah, not a lot of red. Slide that just a teeny bit. There we go. All right. Palantir is up. GE is up. Boeing is up. Zoom is up. ExxonMobil is up. Tesla is up. Tesla, nice little recovery there for them as well. They're up a couple percent. Up 13 points right now. So nicely done for them. XPEB, we can take a look at some of the, let's do that right now. Let's take a look at the EV makers. And I need to clean up this list because I had some other ones in there. But you have XPEB carrying the load today. They're up, look at this, 3%, and it's ripping up too. So that's really, really good. So today's looking like a green day. We needed a green day. So I'm excited that that's starting to happen right now. Li Auto, again, XPEB, Li Auto, and NIO are all China home manufacturers of electric vehicles that sell mostly in China. So if China has 1 billion people and the United States has 300 million people, and you know Canada has, I think, 12 people. No, Canada I think has something like 35 million, somewhere around there. They're about a tenth the size of us. But I love Canada. Borders are still closed. Hopefully they'll let us start heading back up there again. Vancouver, British Columbia is just beautiful. The mountains up there are fantastic. Vancouver Island, where Victoria is a fantastic island to take a motorcycle up to and ride around up there. NIO is up as well. And then Tesla, nice run. Looks like it's a slight consolidation here over the last couple minutes here. But again, solid day in the green so far. We have the Dow recovering up 150 points. The NASDAQ Composite Index up 58 points, and the S&P 500 up 16 points. So hopefully this will carry through. We'll get a little bit momentum, and let's see if there's any. News out of. Oops. There we go. Looking at my personal accounts and making sure that they're in the green, and they are. So there we go. So that's good. So let's see. Yeah, they called this one wrong. The news was saying U.S. stock snapshot. Dow subdued ahead of Powell's talk. So Chairman Powell, I believe, is going to talk today. As investors were cautious ahead of remarks from Federal Reserve Chief Jerome Powell amid a recent rise in U.S. bond yields, while data showed a staggering recovery in the labor market. Okay. Let's see here. And so I'm going to pull up and let's see what time he is going to talk. So let's go. And while we do that, you can see what's in the green and what's in the red. There's the ones in the red. There's the ones in the green. And we should be able to carry this for you. Let's see here. Calendar. So 9059, so that already happened. So at 12:05 p.m. today, that's when the Federal Reserve Chairman Jerome Powell is going to speak. So that'll be at 12:05 p.m. Eastern or 9:05 Pacific. So usually we end the show about 8:30. So maybe we'll stay on and we'll catch that one live. I'll leave that open because it's got a link right there, and I'll be able to do that. And then we can watch that together. So that looks okay there. And let me see here. There we go. I have to get my screen straight on my main screen. So Tesla's up. Let's take a look at Nvidia. Nvidia pulled back. So basically quick up, quick sell off. But still up $1 or so, but not a lot. Still in the green overall. The Dow Jones Industrial Average up currently 168, S&P 500 up 16, Nasdaq Composite up 5,900. So that looks pretty good also. Let's see here. AMD, probably a similar chart. So a little bit of consolidation right now. So that might not necessarily be great news. If we take a look at the S&P 500 and had a nice run at the beginning of the market going up here. Okay, a little bit of consolidation here. So what that means is it's basically taking a break, right? Let's see the heat map. Let's see what's up overall today. Why isn't this working? 15-minute delay, I think. So these are all 15-minute delays. So we're not going to get the heat map for another 5 minutes here. So you have that one there. Let's take a look at the Dow. There you go. And so Dow up a good 170, and that seems to be holding okay. And the Nasdaq Composite is up 61, so about 0.5%. But remember, we were down what 2-3%. Let's see what we've dropped here recently. So if we take a look at the high, where did we top out at? Back on the 1st. And the Nasdaq Composite, you might as well just call this the tech industry now, right? Right about 4%. So if your portfolio is down 4% right now over what it was back on Monday, then what you're looking at is you have a very tech-laden portfolio, and you have a lot of tech in there because that's what all those are going to be over there. So let's check the crypto markets. Bitcoin again down 387 off of their recovery yesterday. Look, it's going to look at this $50,000 level. Anytime you have a stock or a cryptocurrency or something that has a lot of volatility in it, which means it's doing a lot of this, which is what Bitcoin and Ethereum do, and really every cryptocurrency coin that's out there. It's going to have emotional levels. Okay, a stock like Boeing is going to have an emotional level. So Bitcoin's emotional level right now, everybody's psychological play is 50,000. It just is. It's a nice round number. It's got 4 zeros in it and a 5 at the front. And so when you have something like that, that's what everybody's going to look to as the bellwether. Can it stay above 50,000? Okay. Ethereum, its hypothetical number was $2,000, and that's what it got up to a little while back there, a couple weeks ago, I think. Let's see here, 1 hour. Go to the 4-hour chart, should show us back in February 20th. Yeah, so right around February 20th or so, it topped out at 2,041. Then it came back down, and now it's on looks like it's on a steady incline again. Again, it dropped down as low as 1,300. My level that I have it, as far as a good buying area, is a 1450 level. And the reason I say 1450 is because if you scroll back over this way, prior to that, it had pretty good support in that range as well, over here. So that 1450 is actually looking pretty good as far as a buying point. So it looks like that's going to be the new floor. At least that's my guess on it. Is the new floor is 1450. Now that also means it's going to dip lower than that. But if it dips lower than that, I'm not super worried about it. I think that 1450, people might say 1500, but I think the real floor, the new floor, is going to be 1450. It will dip below that and then come back to it before at the size of it's going to make another run. With a caveat. If the overall markets drop, and if the markets, correct, let's say to something like we had in March, and they go down 10% or 15% or 20% or whatever the case is, a lot has to happen between now and then. We talked about this yesterday. On March 14th, they've got to get this new stimulus deal signed, passed, and in place by March 14th. The reason why that's the goal, and that's what's holding up the Senate vote right now, is they've got time. So when they've got time like this, in terms of a couple weeks or 10 days, anybody that's on the fence as far as the Senate goes, because it's a very close 50-50 type thing, you have some moderate Democrats that don't want as much pork in this bill, plus every Republican most likely is going to vote against it or say they're going to vote against it. Will they actually vote against it? It depends. If they come up to these compromise bills and then they pass these compromise bills, then it'll go to committee, they'll hammer out the differences between the House and the Senate bill, quick revote, and then it gets sent to the president's desk for signature. And so if they can agree on things and get that done by the 14th, the 14th is when, that Sunday is when all the unemployment extended federal benefits, that plus $300 that everybody was getting in addition to the regular state unemployment benefits, that is set to sunshine and basically end. In this bill, they're taking that from 300 to 400, and they're going to extend that all the way out until August. So as you have states like Mississippi and you have states like Texas opening up 100% now, saying, hey, we don't no longer care about masks, we're opening up. As you have that happening and the economy opens up again, they're going to look for confirmations in the market as to whether we're going to be able to recover even further. I'm not necessarily convinced that that's the case, because we do have inflation starting. We have the 10-year treasuries that are starting. If I type in, oops, nope, I don't want to change the interval. Hey, what's going on here? Why is it doing this? There we go. Let's see. If you look at the yield on the 10-year treasury, and as this starts to go up, that could portend a little bit on the markets going down. So we'll see what happens on that. Okay. So again, the Dow Jones Industrial Average, we're up 121 or 120, right around there on that one. So 117, and then the SPX, S&P 500, we're up about 7. So the NASDAQ turned red. So what that means is you take stocks like NVIDIA, etc., and they're probably down. Yeah. So again, quick turn, and we're selling off. So people are taking more profits on companies like NVIDIA, on companies like Intel, on companies like AMD, and we should have the heat map should be active now. It is. So again, this is delayed though, so it's delayed about 15 minutes. So that's why you see these companies up. So we'll look in a little while and see, but mixed market, most things that are in the gray or in the dull colors have not gone up a whole lot. Or they haven't gone down a whole lot either. But you have the financials that are doing good, but the energy is, again, these are ones that are going up. If you take a look at companies like ExxonMobil, look at that, up $1.24 on ExxonMobil. So that's good news for them. And then my personal favorite, U.S. Oil, 1.3% up 54 cents on the day. So this one's been on a great run, really since May. It's steadied up from $16 up to 41. So you've more than doubled if you held it in that time frame. And then initially on the day today, you've got a nice leg up here. So again, this is the pre-market, or that's yesterday. If we put in the pre-market, you'll see the regular overall ascension. Post-market yesterday, pre-market today, and then still up on the day, obviously 50 cents. Looks like it's got some room to run up to the $42 range or so, but we'll see what happens. Okay, so market's starting to turn red, and we've got S&P 500 showing down. And again, look at that volatility, right? Look at these down here. Look at that volatility spiking. So that's not looking good, and this looks like the overall market, the entire thing is going to turn red here. We're already red on the S&P 500, already red on the NASDAQ Composite, and the Dow Jones is heading south too. So we'll take a look at that. And what I want to see here is, I'm going to go over to here. And, the big news story today, same one as yesterday, is GOP senators vowed to delay the vote. Again, they're delaying the vote because they've got 10 days to delay the vote. This is just simple, jockeying for a position so that they can get their pork included in the bill. So you're going to see this could go on for the next week. So you're not going to get a signature or the Senate voting yes on this between today or tomorrow. It's going to sit over the weekend, and it's not going to be until at least, I think, the middle of next week before we get something. We've got the 14th is a week from Sunday, so you've got all next week that they can jockey for position all the way over here so that they can put enough stuff into play, let's say by Tuesday or Wednesday, maybe at the latest, so that people can still get their money, because those unemployment benefits on the federal side, the premium, we'll call it a premium to the regular state unemployment benefits, end on March 14th. So that's the timeline on the next stimulus. Okay. So again, all the markets, Dow Jones Industrial Average fighting to stay in the green. Volatility index is huge. Take a look at the VIX. And just a huge upward flow here. Look at that. Where do we start at? Started here, so this is really the flat line, and this is where we've gone since the market opened compared to yesterday. So that's yesterday right here. Here's today. Market's going up. Now the market's going down. So the Dow Jones Industrial Average, again, that is about to turn red, and we're going to watch it live here in a second. You're going to see it right here, but that is definitely going to go red here in a moment. NASDAQ Composite is now down 74. S&P 500 down 7. Again, you can see the changes over here where pretty much everything now is in the red. The only thing that's green is precious metals. Ford is up 11 cents. U.S. Oil, so anything energy related. Ford, that's a nice comeback because they were actually down a little bit yesterday. And Palantir. But for the most part, everything is in the red as far as that goes. So that Dow is really struggling. It wants to hold it, The S&P is only barely down, so we're flattening out here. But if you look at the Dow Jones Industrial Average, look at the what's going on down here. These cells, all these cells. This is volume based on MACD. So if the Dow Jones Industrial Average curves up like this, you'll see this blue line cross. So if you look up here and you say, okay, we were up, then what happened? Well, we crossed. Anytime you see a cross and it stays below after it crosses, that says it's going to keep going down. So that's where we're still at, and that's why this one still keeps going down. Until it crosses again, we may not get a bump back up. But it can turn pretty quickly. Like it did over here, it can have a quick turn, cross, and then go up. Quick turn, now it's going down. And you can do that with any stock. You can do that with Boeing. And Boeing's having an update today, right? So let's take a look at Boeing. Looking at the pre-market, it crossed right about here. And then look, lots of volume, lots of volume. All the bars on the volume side are what? They're green, right? So you have a huge momentum coming up. And then where did it cross? Well, right around here, about 10 minutes after it opened, it crossed back. Had a quick run up, but again, it crossed and it stayed below this other line. That would have basically been a sell indicator. It ran up. If you look over here, my sell indicator is right there. Buy indicator right here, and pre-market. Now it's going down. So it looks like it's curving a little bit here. Okay. Let's go back to the Dow. See this? Okay, that's good. That's good news. So look at that first candle. You've already got a buy indicator on the Dow Jones Industrial Average. So it turned and now it's up 45. Looks like it's about to cross. Now if it crosses, these will start to turn from this light shade of red over to a light shade of green if it continues back up, into a darker shade of green if that momentum continues. Okay, so right here it's crossing. Okay, our candle said buy it over here before this other candle here. Zoom in on that a little bit so you can see this live. Okay, so again, the MACD, moving average convergence divergence, a lot of people use this indicator to whether they should buy or sell into something. Okay, so for example, looking back at Boeing again, Boeing is already up on the day. They're up $4.69. It pulled back, but again, look, same thing, buy. So the market can run off of sentiment and momentum whenever there's a lack of news. What that means is if the overall sentiment on the market is decent, if there's a lack of news on major companies, they can still go up with the rise in the market just because the algorithms are at play. And if the algorithms are at play and the algorithms are using information like I'm showing here and they say buy, then that's going to carry a lot of the major companies into a buying position. So we have a clear cross here on the MACD. Volume flipped over to green. That's on Boeing. Let's go back to the Dow again. And let's see, one second. Okay, so again, clear indication here. So this is good. And again, you can look at the VIX, and now the VIX flipped as well, right? Here we have a cross. This is a cross. The blue is now below the red, barely, but it is. So you'll see sell indicators on this because it's an inverse relationship to the S&P 500. Okay, this is the volatility of the S&P 500. So this is volatility. So as this goes up, the S&P is going to go down. So now we look at the SPX. That's the S&P 500. So we're in like consolidation right now. But the blue is above the red, but barely, and that's why these bars are very small. So it's not confirming anything. Actually, we had a sell indicator over here. Take a look at Boeing again. What's the better one? Boeing is up 425. So your airlines are probably going to be up today. Love, Southwest Airlines, they're actually down just a tad. United Airlines announced the other day they're buying a bunch more 737 Maxes. So good for them. Oops. ALK. Yeah. Alaska Airlines, also a big Boeing customer, headquartered in Seattle, same as Boeing's actually headquartered in Chicago, but a lot of manufacturing is done in the Washington State area, and their 787s are now built in South Carolina. As a matter of fact, the last 787 rolled out of the Everett plant, I believe, earlier this week. So again, Boeing, let's see if it can hold this. So again, it's looking like it wants to cross again. So if this is looking like it's crossing again, now we got negative sentiment again. So VIX, there you go. So they're going to mirror each other, right? So VIX volatility, look at that. Consolidated, now it went back up. So now we're back in the red again. So S&P 500 is now down 9 points on the day. And let me go back over here and find my, there it is. Whoops. Where are we at? Here's our NASDAQ Composite Index, down 105. So when the NASDAQ Composite is down, you can bet companies like Microsoft are down. You can bet that AMD is down. NVIDIA is down. So the heat map, again, this is 15 minutes delayed. So all this is in the green. Watch where this is going to be at in another 10 minutes or so. So it's showing a lot of stuff in the green, but it's a very dull color. So when things are a very dull color, that means they're right around 0 on the day. But Google is up 1.5%. We can take a look at the Goog. Alphabet Company. Only $2,000 a share. Okay, let's do a compare on this. Let's see what they're doing on the daily here. Solid above their 50 and 200 day moving average. Came out with earnings. They had really, really good earnings. Again, YouTube is big. We're streaming on there right now live. We're streaming on Twitch live right now. So yeah, huge upside opportunities on them. Take a look at our fruit, Apple, down $1.12. Okay, look at our meme stocks. GameStop is now down $8, back down to $116, and that's going to happen. AMC off the edge, back below $8 again. So if on Friday all those options that expired that were above $8, they have to go back and buy those shares to provide them to the ones that exercise their options. That has to that already happened, earlier this week. So now we're going to have a lot lower volume. And when you have low volume, that's going to drive a stock price down. So you look at the average volume on a stock, and if the average volume is X, and you say, hey, we've been open a half an hour in the market. If I take X and the market is 6.5 hours long, and I divide that into the total average, right now 14 million shares divided into an average of 184 is 8%, right? If we take 5 times 195, so if we divide into 195, market's been open 15% of the time, and we've only got 8% of the volume on this stock. It's going to go down in a situation like that. Take something like Boeing, which is up, right? So Boeing is up, and its volume on 18 million, so 5.79, divided into 18.2, and it's already done 32% of its volume for the day. So in the first half hour, Boeing's traded 32% of the volume. So with that usually portends a pretty good up day for them. So if you want to find the ones that are going up in this type of a market, you have Ford is at absolutely flatline 0 right now. GM, 20 cents. And when you think of the U.S. car manufacturers and you're looking for future electric vehicles, Ford has already come out and promised that every one of their vehicles is eventually going to have an electric option. GM basically the same thing, but GM, Ford, etc. are also looking and building plants in China as well. China is a huge economy. Whether it passes ours at some point, GDP wise, it's possible. But they've got 1 billion people over there. We've got 335 million. So there's other opportunities in the market. You have U.S. Oil. Again, they're up on the day, up 55 cents. You have ExxonMobil. They're up $1.16 on the day. So all your energies, some of your travel stocks, as the economies of the world start to open back up again. United Airlines, down $1.05 could be an opportunity there. One of my favorites, I like Love. That's who I prefer to fly. And if you take a look on the weekly, or take a look at where they were pre-COVID, look at this. This is before the shutdowns happened. The shutdowns were starting at the end of January, beginning of February, and that's when the slide started. And looking at companies that have already recovered, so Southwest is basically at this point recovered. Okay. The caution in that is as they report their earnings, right? As they report their earnings, slide down here, they still beat their earnings expectation every quarter. So what they forecasted, or what the analysts thought that they would do, basically, allowed them to recover a lot quicker than someone else would have been able to. Oops. And I want to go into moves here. And let's try this one. Nope, we don't want that one. Trying to find. Let's do a little electronica and dance. Let's see how this stuff works. And if it doesn't work, let me know. Okay. All right. Back at it. So again, everything's solid in the red now. Dow Jones down 15 points. S&P 500 down 17. NASDAQ Composite down 172. Again, this one, all these tech stocks are just selling. And if you look at our heat map, again, everything that was green 10 minutes ago, a lot of it has turned red. The shades of gray are disappearing, and things are starting to go down. So Google, Facebook up, but again, all your energies are up. Some of your healthcares are up. If we take a look at some of the stocks, let's look at the vaccine ones. Moderna is down 85 cents. Pfizer up 62 cents. And J&J, which had a run up after the announcements on Saturday that they've been approved for emergency distribution of their vaccine, they're down $1.01 right now to 155. And let's go back over here. Boeing. NVIDIA just getting clobbered again. Clobbered. This is not good. Back down below 500, so that means it's going to struggle. It is going to struggle. All right, and then Cinemark up 17 cents, but AMC, I'm sorry, is down, and GameStop is down. Key level on GameStop is probably 110. AMC key level is $8. Cinemark key level, well, it looks like right about where it's at now, huh? Let me go back up to a 5-minute. Eliminate the external. And we might see, yeah, pretty much right where it's at right now, $24 or so. That's probably a pretty good pivot point for that company. Ford, everything's in red right now. Everything's dropping off the cliff. If you take a look at the VIX is going up. Not necessarily parabolic up, but it's going to look ugly here. Look at this. So this is market open right here. This is where the market opened at. Huge downside. Now it's spiking up. This is inverse to the S&P 500. So as volatility goes up, S&P goes down, unfortunately. That's just the way it works. Okay. Taking a quick look at watch that one for a minute here. So you can see, crossed, right? Sell signal. Okay. So just an overall another red day. Again, this is stimulus fears. The mainstream media, all the news stations, your CNN, your ABC, CBS, NBC, Fox News, whoever, call any initial you want on there. They're going to blast this news about, if one side of the fence is not allowing the stimulus package to go through so they can play this blame game. And this blame game is something that they're going to want to do and play all the way over the weekend so they can get on their news shows on Sunday morning all the way through next week. So that means that, like I talked about before the market opened, you have this market risk that's out there. And as these things sell off and continue to sell off, that sentiment just turns negative. And if everybody's talking about, oh, the market's overvalued, market's overvalued, they're basically going to bring that to bear anyway. But don't panic, right? When do you need your money? If you're not going to retire for 20 years, this is a small blip. If you're already retired and you got a lot of your money in techs and things like that, and it's pulled back significantly, maybe you should not have had as much money in those particular sectors, because the sectors right now that have been doing well this year, energy has actually done fantastic. If you take a look at ExxonMobil, and let's take a look at them since January. See where we started, 2021. Oops. Here we go. January 4th. It would have been up 39%. ExxonMobil's up 39% year to date. Okay. 39%. That's huge. So 57.30. It's up $22. So if you had, 500 shares of that, be up 11,175 since the first of the year. Something like Boeing. Even Boeing is up comparatively. Roughly 14% year to date from January 1st. So there are some opportunities out there. You have a company like Ford. Ford is another one that has just done fantastic. But look at this one. This is huge for them. 43% year to date, Ford. They're coming out with their F-150 Ford truck electric vehicle. They want to compete. That thing will be out on the road well before Tesla gets their electric. I don't even know what to call that thing. Y'all saw that, right? Tesla's electric truck. Take a look at this. Here it is. I don't know. Maybe some of you find that attractive as a vehicle. Me, not so much. I'm more of a rounded edge type of a guy versus squares. Aerodynamically, it's good. You have great angles here for airflow to come up over the top. And we know a lot of what happens is, air goes up and then it slams back into the bed of the truck. And it can create some pressure on the tailgate, and you don't get very good gas mileage. So the challenge that Tesla has is we're not talking about gas mileage. We're talking about aerodynamics and air efficiency, airfoils, kind of like an aeronautical term, of how airflow goes over the vehicle to minimize drag, right? So the drag coefficient on this is going to be, a lot better aerodynamically than it would be on a traditional pickup truck. So if you type in Ford electric truck, and you're rendered based on something, what's it going to look like? Probably pretty much exactly what it looks like right now. But that is at least in the U.S. market, the most manufactured, best-selling vehicle, best-selling truck of all time is a Ford F-150. That's the one that everybody wants, and I like that. You give me a choice between that thing and the Tesla electric truck, and this is electric. I think I'll take Ford's because you can get a lot of work done. That's a short bet in that picture there. But they're all guessing what it's going to look like. What will the charging port be over here? What is this one? Latest total nonsense from Detroit. Nobody wants electric pickup trucks. Well, there's some validity to that statement that nobody wants electric pickup trucks. Trucks are meant to be beat up, right? They're already expensive. If you look at the MSRP, let's say Ford F-150 truck price, and we're not even talking about the platinum ones. Pricing and incentives. Well, let's see. Let's go to Ford's website and see if they give us a number. Oh, contact your local dealer. Contact your local dealer. Contact your local dealer. See, they don't ever want to give you what the price of the truck is. Let's go back over here. And oops. Oh, there we go. Car price secrets? No. Car.com? Well, it's going to show it 250s. Yeah, see, we don't want that. You can't just get a price anymore. You can't just go somewhere, click on something. They're going to want your email address. They're going to want, they're going to want to track you through your cookies in your computer, so they can send you watch all this searching on here now means I'm not logged into any of my emails on this account right now on this computer, and what this means is now I'm going to be pushed Ford ads probably for the foreseeable future. Let's see this one. Here's how much the Ford F-150 has increased in price over the decades. The first ever Ford F-Series had a base MSRP of $1,279. Amazingly, that's no longer the case. Imagine that. Okay. Dow Jones down 53 points, S&P 500 down 18 points, NASDAQ Composite down 167. And you can see down here, you can just watch the S&P 500 is on the top. The VIX, the volatility index, is down on the bottom. And let's see here. Here we go. Oh, this only goes through 2015. Yeah, 2015, maybe Ford F-150s were 29 grand. Not anymore. That's an old one, and now this is an ad. Interesting news I read last night doing some research on Toyota, and apparently their RAV4s, which they have like, I don't know how many they have in the US, some of them have been catching on fire. So not good. So anyway, I'm not going to poke around looking for this thing all day long to try and find out what a price is. But Ford's down 15 cents. But again, it's a good company long term if we get an economic recovery. If we're possibly heading into a recession, if inflation comes up and the markets go down and the bond market yields go up and mortgage prices go up and housing prices go down and unemployment increases during that time period as well, it could be the worst of all worlds. You could have an absolutely major correction in the markets. And I'm not just talking about the stock markets. I'm talking about the stock markets, the housing markets, construction industries, infrastructure, everything. And you know, will that go into bonds? I think more than likely, my guess, and actually my hope, is that it goes over here and it goes into Bitcoin or Ethereum. I know when I looked at my portfolio this morning when I woke up, and it's 7:19 a.m. where I am, and we've been streaming for almost an hour and a half now. Yeah, I'm up like 1,000 or so today in my cryptocurrency. So not a lot, but it's certainly it's certainly on a day where everything else is red. I'll certainly take that. And then Ford only being down a little bit. But what else is carrying me? Well, U.S. oil. This is like the engine that could. The engine that could. Now, how much do I like this company? Or, I'm sorry, this ETF, this exchange traded fund? They trade oil futures. So if you believe like rocket attacks that are starting to happen again in the Middle East, and I read somebody was killed in Iraq yesterday where a rocket landed at a base where some American armed service members were. I didn't hear if one of them was killed or not, but they didn't have it in the headlines, so I suspect not, but I'm not 100% sure on that. If you know, post it below and let me know. But you take something like oil and you say, well, if the rest of the market is going down, what can I look at to hedge that? Here you go. ExxonMobil, gas, natural gas. Now, natural gas, be careful of, because natural gas spikes in the wintertime. What happens in the spring is the weather warms up, people start using less natural gas. What that means is the contract prices to supply the natural gas that's needed for the summertime are probably going to most likely dip a little bit. But oil, on the other hand, again, volatility in the, take a look at volatility and take a look at the VIX and say this is probably a pretty good representation. Don't take this as advice, but this is probably a representation of the oil market as well. As things go south and the world unwinds a little bit, even though it opens back up, unfortunately that opens up the opportunity for people that want to do harm to others to travel also. So as there haven't been, at least recently, other than Africa and the problems that they're having in Ethiopia right now, which is huge, human rights issues and things of that nature. But what's going on in the Middle East is it's a tinder pot. And that tinder pot was very much subdued over the last 4 years, really. It basically, we drew a line in the sand, and the prior administration, took out a couple people and sent a warning to those in the Middle East and said, hey, we're not going to stand idly by and let you run that area into the ground. We have a different administration. We don't really know at all what their Middle East policy is going to be. I admit I have not looked for what their policy is going to be, but it's something that, there's a lot of risk there. So with that, what happens if Iran starts seizing tankers again, like they did a few years ago? Oil prices are going to spike. What happens if conflict starts again in the Mideast? And let's say not even the Palestinians, but what's going on with Saudi Arabia and Yemen? On Inauguration Day, shortly thereafter, the current administration, the Biden administration, made it absolutely clear they do not support the opposing the rebels in Yemen. So Saudi Arabia and the U.S. are linked. All the oil and everything else have been for decades. Call it what it is. They are basically in business together. Treat Saudi Arabia, Aramco, as one big corporation, and the United States as another big corporation, and they just want to go like this together. Saudi Arabia has been fighting a proxy war in Yemen, supporting the government of Yemen against the rebels in Yemen. Our administration came out and said we're not going to support Saudi Arabia against those rebels anymore. So if you were Saudi Arabia and you're fighting these people that want to continue to attack Saudi Arabian ports and send rockets and stuff like that, and your biggest country that supplies most of your weapons, like the U.S. does to Saudi Arabia, says, hey, we're not going to support what you're doing anymore. And we come out and say it. We don't just say, hey, everything's great. We're looking forward to the continued relationship between our two countries. No, we say, new administration, we don't support you anymore. Now you have OPEC, and OPEC controls oil prices. So OPEC gets together, and it's not just Saudi Arabia, it's 14, 15 different countries, etc. And they say, you know what? They don't want to support us. Let's cut the supply. Let's peel back the amount of supply that we're allowing to come into the market and cause oil prices to surge. Your gas prices have already been going up at the pumps. They've absolutely been going up, okay? This is why. So when you take a look at crude oil and you say oil right now is at $62.35 a barrel, and you say, where were we since the first of the year? And you probably don't even realize this, other than saying, oh, I guess gas prices are up a little bit. What's oil up since the first of the year? $13 a barrel, 27%. Okay. What is it since Inauguration Day? Okay. Look at this. If you don't think these are related, they absolutely are correlated between the prior administration and the administration we have now. November 4th was Election Day. Look at this. November 2nd. When was the bottom? It's doubled. Okay. 2nd of November, 2 days before the election in the U.S., it bottomed right here. Since Election Day, $83%. It's almost doubled. The price of a barrel of oil has almost doubled since what it was 2 days before Election Day in the U.S. If you don't think that's related, if you don't think that this volatility that we're seeing in the markets now, you want to be in a sector that's going to perform well in a down market. You want to take risks that are appropriate for you of things that you're guessing. Now, caveat. I'm going to be 100% wrong. I'm absolutely wrong. Oil is going to crash. It's going to go from $62 a barrel down to $3 a barrel. Don't put any of your money in it because you're going to lose all of it. That's my disclaimer. This is not financial advice. This is for education and entertainment. I've already made my move. I already own U.S. Oil. That's my pick. Would I pick up something like ExxonMobil at this point? You say, well, geez, crypto. ExxonMobil is up 78%. It's up $25. That's way too high. The whole market is in a bubble, except for energy. let's take a bigger look at this. And you say, okay, it's at $49. It has pulled back from 2014. Oops, where are we at? 43% since 2014. Okay. If you look at where it's at, really came down. And then in January, now this is interesting. Because in the U.S., you hear nothing except that the pandemic started in March. That's what the media leads you to believe, is that the pandemic started in March. But the pandemic starting in March, it didn't start in March. It actually started in November, December, and huge in January. I was absolutely watching what was going on in January. And look at this. 13th of January. Here's ExxonMobil. Huge drop, right? The demand drop. But look where it's at now. We're not even back to pre-COVID, pre-pandemic, right? So the initial level that this thing can run to, you've got, in my opinion, ExxonMobil, immediate 23% uprise or opportunity. Okay. So if I took a look right now, let's see here. I'm going to a 30-second chart. It's up 2.9% today. It basically hit a wall though for today. The S&P market's coming back. Dow Jones is down 7. NASDAQ still down 124. S&P down 11. If you've been watching, again, as the VIX went down, the S&P 500 went back up. If you like this stream, hey, do me a favor. Tell your friends about it. If you know people that can watch this stuff, take a look at that. It'd be appreciative. Let's see here. Might take a trade today. I don't like that one as a buy right now. Powell doesn't talk until 9 o'clock Pacific, so another hour and a half. 12 o'clock noon. Boeing off of its high of the day. But again, see where this line is? It crossed. So we got to see what the market is going to decide to do on this one. Microsoft, above the line, not a buy. Ford, below the line. Might be some opportunity there, but I'm already invested in Ford. So, and I'm very, very profitable in Ford. AMD, I don't think I'd come near that one right now. Will it come back up to this range today? I don't know. Here's the thing, though. What could the Fed possibly say that will change this sentiment and remove the risk of a bubble collapse or a market collapse? You're going to get these stimulus checks, and they're going to send out $1,400 for those of you that make $75,000 a year or less. You'll get $75,000. They're going to bracket it again if you make between $75,000 and $100,000, and if you made over $100,000 either on your 2019 tax return or your already filed 2020 return, you aren't getting a single penny. Doesn't matter if your mortgage goes up, if your pricing goes up, if gas prices go up, you're not getting a thing. But if you make $75,000 or less, this is going to be good for you. Excuse me. So what are you going to do with that money? I know where I wouldn't put that money. I wouldn't put it over here. I would not put it over here. This is interesting. Starbucks. Let's look at the bucks. Now, Starbucks, guess where they're putting. Okay, so this is not meant to be sexist at all, but this is something that if you look at Target, and I want to look at the daily. Look, we're going to be open up for the summer. I'm telling you right now, the majority of the country will be open for summer, will be open for travel. I don't believe that there's going to be some vaccine. Show your papers. We need to make sure you got the vaccine before you can come into our facility. Anybody that does that, I'm not going. I haven't decided if I'm going to get the vaccine yet. Where I live, apparently I'm not eligible, but if you decide to get it, that's up to you. I have been waiting for the Johnson & Johnson vaccine. If I had a choice, where I live, the majority of vaccines that people are receiving, people I've actually talked to or read about, are all getting the Moderna vaccine up here. And I'm on the upper West Coast. If given a choice between Moderna and Pfizer, I don't like Moderna because I'm not a big fan of Dr. Fauci. I think he came out and lied a whole lot, as did all of them. The entire government lied to everybody. The biggest lie that they put out there was originally that masks don't work. And then while all the government workers, all the first responders, and all the state governments, local police, fire, and everybody else got N95 masks, you as the public weren't allowed to buy them. Then they came out and said, oh, wear these cloth masks. These are going to work for you. No, they don't. And then I think the biggest mistake is when we saw one of the huge big waves is the airlines came out and they actually said no valve masks, no N95 valve masks, which means you can't protect yourself on an airplane. And they were bragging about, middle seat's open. I don't care if the middle seat's open. If you got a bunch of people in an aircraft, you're going to increase the risk of something being transmitted, whether it's the flu or a cold or whatever. So if there's any benefit to come out of all of this, it's that, during flu season, you're going to see a lot more people wearing a mask going forward. So come next fall, you're going to see people out and about on the streets wearing a mask. Please, 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 for the love of all that is good, do not tell people, that they're crazy for wearing a mask. Wearing a mask will help prevent you from getting the flu. It will lessen the amount of virus particles that get injected into your body through breathing, which means it gives your body a greater chance to fight something off. Okay? So you have that. So anyway, I digress. So back to Target. Okay? Target, look what's happened to Target since the pandemic started. They're up 86%, up $79. Okay, and historically, that puts them pretty much at an all-time high. They peaked out at $199 right around the 14th of January, right around there, at $199.96. Okay. Guess what they're going to be putting in all their stores? Starbucks. Okay. But again, these are stocks that are priced super, super high. What I'm telling you is this. What I'm going to do with my money is if and when we get what I would consider a major correction, call it 10%, market goes down, what am I going to look to buy into at that point? What I'm going to look to buy into at that point are going to be restaurants, energy, but I'm already in energy. I'm looking for another energy play. So if you know a good energy play, pop it below and let me take a look at it, because I would definitely be interested in what you have to say. Let's see here. Okay. So again, the heat map, everything still red. The Dow is actually up though. The Dow Jones Industrial Average is actually up. So Starbucks is something that can it continue? Yes. Would I buy it at this price? Not really. Would I buy Target at this price? Not really. Plus, it's even above their lines. But as a short-term play, should come back up to 174, a couple bucks. But not right now. This would have been the area to buy it in. It told you to sell up here, buy down here. MACD is in a rising trend line, so it will carry enough momentum. It'll probably come up to here. It'll meet a little bit of resistance possibly, and we can watch that for. Let's watch and see what happens here. So watch what happens when this thing hits the line, and let's see where it goes. So if the overall market is trending down, even though the Dow is up, we recovered off of the lows though. You know, again, we don't know what Federal Chairman Jerome Powell is going to say in an hour and a half at 12 noon Eastern, 11 o'clock Central, 12 o'clock Pacific, or 9 a.m. Pacific. So we're going to stay on for that today. I'll probably take a short break. And I'll need to get some more water because my coffee's almost gone. I do 1 cup a day. That's it. Just 1. That's my limit. So here we go. We're on target. Get it? Nice pun, right? So target is on target. So it's coming up to its 50-200 moving average. Now this 50-200 moving average is only based on 30 seconds. So each of these lines, each of these are called candles. Each of these candles represents 30 seconds of time. So this is a price average of the 50 last candles and the 200 last candles of what Target has done. And it's taken the average price of those. And as the overall market goes down, these will drop. So this was a huge sell indicator up here. And it called it, right? It called it, then it dropped. Then it said buy, then it said sell, then it said buy again. Let's see where it's at now. So we can watch this a little bit and see what might happen as far as if it hits the line. Okay. Sentiment is moving down. If you look on the bottom, again, these two are very important. This is market sentiment. This is my fear factor chart. It's called the volatility index. It will trade inverse to the S&P 500. Okay. 1 second. Had my watch. I didn't have my watch on. And I got to log into it. There we go. I'm going to go back to news while we watch that one. So see how it's in. It's forming a little bit of consolidation here. It's saying that, hey, you know what? Hey, we're up to the lines here. Do we want to go push higher? Well, the rest of the market is starting to come back a little bit, so it might cross over. So where's it going to go after this? Well, if it holds above here, which it appears it is, we have opportunity for it to go higher. And there we go. There's a nice jump, right? So it consolidated, it confirmed, it broke these over here. Now we've got momentum. And again, it would have told you from MACD, convergence divergence, to go ahead and buy there, right? Actually, our indicator said buy it a couple candles before that. It saw what was happening down here. It saw that the volume was dropping. But then the last run that it has, solid green. The sell-off, the sales, those selling were less than the last group that bought. So in other words, there weren't fans of driving the price lower, right? Now we have more buyers, momentum coming in, broke the line. Now where are we going to go? So where is it going to go? Well, let's take a look. Let's go further out. Now we're on the 5 minute. Let's try the 3 minute time period. So now each of these lines represent 53 minute periods and 200 periods of 3 minutes each. So that's its next stop, 174, which is what I talked about before. So it's got, but if we go to the 5 minute and say it has its old, okay, Let me go into the 1 hour. So we're trading back to levels not seen since December. Okay. So right now, target is at December levels. Okay. Bounced all the way up, hit the wall, hit resistance at that 199. Now we're back down to 172. Okay. We're going to get stimulus checks. Summertime is coming. The economy is opening back up. Earnings? Killed it. Killed it. Killed it. They don't report again until May. Estimate was $2.54. They came out with $2.73 a share. They pay a dividend, right? So they pay a 68-cent dividend for holders as of 15th of February. So that means for every share that you owned, you got paid a dividend. When a company pays a dividend, if you don't know this, there's companies that pay dividends. For example, I have a dividend chart. One second, let me go get it. And these were dividends that I was looking at for the first quarter. And if I can get that to where you can see that, hopefully. Okay. Some of those companies: Microsoft, ExxonMobil, SBG, 3M, Target, J&J, Johnson & Johnson. Let's look at Johnson & Johnson. Costco. I got the Costco dividend and the Microsoft dividend. I think I got too. So here's an example. Let's take ExxonMobil because we're looking at them. Okay. Looking at it as an energy play for ExxonMobil. ExxonMobil paid out an 87-cent dividend. Okay. So one of the things you look at with dividends is say, well, how do I don't want to own the stock for a long time. You don't have to. There's two things with a dividend. You have when they go X and you have the record date. Okay. You have to hold the stock in your account on the record date. Okay. And that's usually before the X date. So you only have to hold the stock for 2-3 days, and then you'll be paid the dividend. But when it goes X, when they pay out that dividend, the stock value will dilute by the amount of the dividend. In other words, the stock price will automatically be reduced on the market open following that date by the amount of the dividend. So what you're really talking about is, well, then why should I buy the dividend? Well, you'll see people buying up in anticipation of the dividend. They'll get the dividend, it'll drop, but boy, they still rode the dividend rise. Maybe they sell again. In ExxonMobil, most people that hold the dividend, they buy it for income purposes. That's an income stream. You could literally trade dividend stocks and create income for yourself. And so what does that mean? Well, exactly. So let's say that ExxonMobil's dividend, by the way, Dow is green, 52 points. S&P is up 4.85. NASDAQ is down only 6. So nice recovery here. Volatility is going down. It's getting closer to Powell and the Fed comments, which will happen in just about an hour and 20 minutes. So ExxonMobil pays an 87-cent dividend, right? I think that's 87 cents. Hold on a second. Yep. They pay an 87-cent dividend. So if ExxonMobil pays an 87-cent dividend, let's say you put, let's just call it $10,000 of stock. Okay. $10,000 divided by $52.16, okay, is 191 shares. So let's say you bought the stock and you own the stock. You have 191 shares, which is $10,000 worth. You're going to get paid 87 cents per share. So you take that 191 times 0.87 cents per share, you're going to get a $166 dividend. Okay. So now the stock went from 52.16 down to $45. Well, 52 minus 45 is $7 times 191 shares. Now you're down $1,300. Uh-oh. Well, that was bad advice, wasn't it? You told me to buy it on the dividend and then hold it and then sell it. I lost money. Yes, I got $166 of dividend, but I'm down $1,300 on the price of the stock. Yes, you are. You have to buy it down here. The anticipation of a buy on dividend is something, and you can say, okay, well, they'll announce the dividends before they go X and record date, but you can guess around the time frame that they're going to do it. Okay, and it could change by a day here and there. All right. So the 9th of February is when it paid a dividend. Okay, so when's it going to pay its next dividend? Well, if it paid on February 9th, March, April, May. So right around May 9th. So let's look at the weekly and see when they paid in May. So February 9th, right? Usually right after earnings. So when they report earnings, they'll report what the next dividend is going to be. Okay. So earnings was on the 1st of February, dividend reported on the 8th. 26th of October, 9th of November. 27th of July. We are all in the green now. 10th of August. Here's our April. What did we say? February 9th. So we said May 9th. May 11th. So again, within a couple days. So look at what happened in the week before. You had a little bit of a run up, right? Not a lot, but let's say you bought it in anticipation. Get a 6% rise in the stock. And it only dropped a little bit. Earnings, now this one dropped, okay? Again, August, July, gas prices were super low. Oil was low. But the next one, rise. Again, if you're looking for a long-term hold, you wouldn't sell it. You're just going to participate in the dividend. So ExxonMobil, even at these prices, it's at its 52-week high, but its historical high, not even close. If things happen in the Middle East again, which unfortunately I think they probably will, and we have volatility in the Middle East, and we have inflation that goes up, as the economy recovers, we had a huge pullback in manufacturing of pulling oil out of the ground, right? As oil prices go up, that supply will actually increase, but the demand is increasing. So the unknowns right now is I haven't looked at what the reserve percentages are on oil. I would guess most countries, we haven't heard about it because most countries have a huge supply of oil to hedge against increased prices. But if I'm right on this, and if I think we're taking a different position in the Middle East than what we've had over the prior administration, and some of what would be considered allies before, the sentiment has switched where we're not supporting Saudi Arabia anymore in their battle with the rebels in Yemen. Okay, if we're not supporting that anymore, and OPEC says, hey, we're going to punish the Western allies, call it NATO, US, etc., we're not going to pull as much oil out of the ground as we've been pulling out. That's going to cause oil to go up even further. That's going to cause your gas prices to go up even further. Natural gas probably go down a little bit because we're getting into the warmer months, the summertime. But natural gas, now you have, the majority of the population of the world lives above the equator. Don't forget that. So you still have people below the equator, but I think the majority live above. But I'm not 100% sure on that. Let's take a look. Let's see if we can figure that out right now. Let's see. Percentage of population above the equator. Did I spell that right? I don't know. I think I did. World population by latitude, longitude. Let's see what happens. Let's see. World's population in 2000 by latitude. Well, that's an old article. Let's see. Here we go. I was right. I just didn't know I was right. 88% of the world's population lives in the northern hemisphere. So if this is the equator, 88% live above the equator, right? 12% live below the equator. We're going into the summer. Natural gas prices, not as much demand for heat because 88% of the world lives above. What that also means is, as they're running their air conditioners in their cars and everything else, gas prices are going to go up even higher. So look for gas to spike this coming summertime. What it's going to go up to per barrel, again, it's had a huge increase, and it doesn't seem, it doesn't seem to want to stop this. Oops, that's on the weekly. It does not, after the drop in March, does not want to see. It's steadily been going up. So with a company like ExxonMobil, I think there's room for this company to go up. I don't own any ExxonMobil right now. So, the science says wait for a pullback. Because if the whole market does correct and goes up, now we're all in the red again. Again, you all knew it before I did. Because the VIX index went up, S&P went down. So if you think oil prices are going to continue to go up, this is an ascending channel on these 50 and 200-day moving averages on a 15-minute timeline. On 1 hour, well above. 4 hours, well above. It's the same thing like Tesla, okay? Don't buy Tesla, don't buy Tesla, don't buy Tesla, don't buy Tesla. Except for everybody that bought it down here when it first crossed the line and never dipped back down again on the 4-hour chart until here. I sold my Tesla back here. Where was it? Somewhere around, I think it was, it might have been this time frame. Yeah, December? Yep. I think it was right around here, 663. My sell indicator said sell. So I said, okay, I'll sell. And then I totally made a mistake, right? I missed out on all of this up here. Made some decent money on it, but I missed out on all that there. I never bought it back. Now it's dipping below 644. Where's it going to go to next? Well, it depends. If it holds this line, it may do what it did here, and we may get a turn. That's what the people that all bought Tesla up in this area did. Remember, I did not buy Tesla up here. I sold Tesla right here. So everybody that bought up here right now is losing money, and they're hoping it comes back. Time will tell. But ExxonMobil, okay. U.S. oil, well above. I don't think they're too late because like U.S. oil, I think that's going to 100. Why? Because that's where it was before. That's where it was before. Okay. When will it go to 100? Good question. I have no clue. I really don't. I don't know when it's going to go to 100. I hope it goes to 100. Okay. Because it's on a nice channel since April. Nice, slow, patient ride up. Okay. And it's well below its moving averages. Look at this. Where, at what point does it go above its moving average? The daily. Okay. And it's above it. But again, that is a solid chart. Absolutely solid. It's above the VWAP, the volume weighted average price, and it's solidly above its 50 and 200-day moving average. This is longer term momentum. Okay, this is longer term momentum. which means that it is in an uprise. It doesn't show any stops of slowing right now. And if you believe, like I do, that energy is going to be the greater of the plays, even if the market goes down, I have money in energy. And I have money in energy because I believe in the story. I believe oil prices are going to continue to go up. And if you're looking at other plays within the energy sector, you have Chevron. I bet the chart looks similar. So let's look at ExxonMobil again. Okay. And let's look at Chevron. Oops. CHV. Hold on a second. I don't follow Chevron. Okay. And this is probably why I don't follow Chevron. Slightly different chart. But I think I'll start following them. Let me put them in my list here. CVX. That's why I didn't know the symbol. Okay, they're in my list now. All right. So look at Chevron, and let's do a compare. Where's my compare at? And let's do a comparison to ExxonMobil. Okay. I don't know. Which one would you rather be in? If you look at what happened around the pandemic, who's the stronger company? These are going to go closer together here. Okay, look at this. Running together, Chevron was outperforming. You got ExxonMobil as the orange line. Going forward, ExxonMobil's outperformed. So that says that if historically for the most part, Chevron has outperformed ExxonMobil. But since the pandemic, ExxonMobil has outperformed Chevron. So don't do what I do. Don't do what I do. But Chevron might be a good play too. Okay. There you go. All right. The riskiest one of those three, ExxonMobil, Chevron, or U.S. Oil. U.S. Oil is an exchange-traded fund. If you go to, let's see, USO ETF, do a search for USO ETF, and then you go to ETF.com USO. I don't know what that one is there. Let's try this one. ETF.com/USO. I haven't looked at this in a while though. Okay, United States Oil Fund LP. LP stands for Limited Partnership. Now, what that means, again, this is not financial advice. I'm not telling you what to do. Everything's green, by the way. Dow was up 39, S&P's up 6, and the NASDAQ Composite just flipped green, up 4 points. This is not financial advice. Consult your tax advisor. I do not give tax advice. However, what I do know is in my own personal situation, the capital gains on an ETF are treated differently than the capital gains on a stock. Same thing with cryptocurrency. Cryptocurrency, Bitcoin, Ethereum. Every loss that you have in cryptocurrency, consult your tax advisor. In my particular case, I can deduct as a loss no matter what, because cryptocurrencies, according to the IRS, are treated as property. They're not treated like a stock. ETFs are not treated like a stock. The capital gains is different. Google it. Maybe I'll do an ETF video on what the differences are on those. The main thing you have to understand is if you purchase an ETF, there is a charge for it, much like a mutual fund. I think the ETF charge on U.S. oil, I want to say, is 0.73, 0.74%. Here we go. Expense ratio, I was close, 0.79%. So for every dollar they make, they're charging you 7.9 cents for their knowledge. Okay. ETFs are risky. Okay. At some point, they will devalue quite a bit. But up $2. Wow, I didn't realize it was up that high. Hold on. Huge. 4.8%. Go baby, go. Maybe because I'm talking to the limited number of viewers I have. Hey, help me out. Hit the follow button if you're not already following. Hit the subscribe button on YouTube. And please tell your friends. If you like the content that I'm trying to give you here, and do some teaching at the same time. We have about an hour before Powell speaks, and you find this of value, let me know, and we'll go from there. All right. So again, this is a $3.38 billion fund. It trades about 191 or 6 million shares a day is what it trades. Look at the volume. Again, we talked about this. 4.3 million divided into 6 million. It's already traded 72% of its volume for the day, and we are only 2.5 hours in, or an hour and a half into the market. And so we still have 5 more hours to go, right? So still have 5 more hours to go, and this thing has traded 72% of its shares. Going that way. Who cares what this does if you're in an ascending stock that's going bonkers to the upside, okay? I'd be comfortable buying more right here, long term. Long term, I believe oil is going to continue its rise. I believe volatility in the Middle East is going to happen. I believe, based on our policy decisions, that there's going to be some issues in the Middle East going forward. And I think that at some point, OPEC and the oil-producing countries are going to punish us for that. And if that happens and oil goes up even higher, you could be looking as high as $4.50 a gallon for gas. What's the average right now? I have no idea. USA average gas price gallon. Hopefully it'll just give me a number. Look at it. Look at that. 279? 279 a U.S. gallon for the week of March 1st. But again, if you look at April, you see this chart? Look at this. This is the average price of gasoline. Okay? Look at U.S. oil. Ready? Watch. Greater rise. ETFs are what's called a leveraged fund. So what that means is this, and we'll talk about this repeatedly till it clicks in. If the price per barrel of oil, look, everybody right now, you go to every other stock channel right now, you know what they're talking about? They're talking about freaking Tesla. They're talking about, Microsoft. They're talking about GameStop. Great. Trade your momentum plays, make your money, or in most cases, lose your money on those. Okay? I want to try and tell you what I think is going to happen going forward. I think oil and gas prices are going to continue to rise. I think I'm right on this. All the research I've been doing over the last year almost, since March, tells me that I made the right play. It's being confirmed every single day. So as this goes up and it continues, we'll see. 6 months from now, I'll do this right now. Well, I can't do it on this, but 279 here. Yes, I can. 279 into $4.50. Okay, is a 62% rise. Okay, so watch what I'm going to do here. 62%. So if I take 43.20 plus 62%, 43.20 plus 62%, I'm going to set an alert right now for $70 on U.S. oil. And we'll see how long it takes to get the $70. Open-ended, verify an app. Yeah, I want to make sure I don't miss it. Okay. There we go. I have an alert. That's where it's got to go. Okay, see this orange line? That's an alert that I set in my program to tell me when U.S. oil is going to hit $70. So if I think gas is going to go to $4.50, which I do, we'll see what happens first. Will it go to $4.50 a gallon on average, or will this go up to $70 first? When's the last time it was $70? Not that long ago. 10th of March. Oops, is that right? Yep, the 9th of March. So 9th of March, this stock was at $70. Or this ETF was at, sorry, not a stock, was at $70. 62% rise. Don't do what I do, you're going to lose all your money. All right, back at it. So we can close the gas one. So looking at U.S. oil, looking at volatility is going up again. So market, again, we're teetering. We're not, this is why I'm teaching right now. The reason why I'm going over this stuff right now is because the market's just going to wobble. And it's going to do this all day long, individually. You're going to see, a lot of dull colors. Bright colors, bright green, positive gains, really bright greens, energy, big time gains. Look at Micron down 3%, Nvidia down 1.32%, 505. It's got to hold that $500 level. We'll see what happens after Powell speaks, but I don't know what the Fed can do. I'll get into more of that in about a half an hour. We'll start talking about the Fed and the money supply and everything else, and then we'll listen to the press conference live here on the program as well. So U.S. oil up 2% today. So this is an ETF, all right? And let me make this bigger so maybe you can read it, but I'll read it out loud as well. U.S. oil, I'm right here. Okay. U.S. oil delivers its exposure to oil using near-term futures. They get exposure to oil using derivatives, options, several oil ETPs. The fund predominantly holds near-month futures contracts on WTI rolling into future contracts every month. This method is particularly sensitive to short-term changes in spot prices. Again, every time I talk about U.S. oil, I go right back to the CLI. I go back to the price per barrel on crude. Okay. Here's why. USO held front month contracts until April 17th, 2020, at which time, following leeway in the prospectus, USO changed the exposure from holding specifically front month contracts to holding predominantly front month contracts. Okay, so they switched it. 30% next month and 15% contracts with further expirations. Read that again. 30% next month, 15% contracts with further expiration. 15% of the portfolio is buying futures contracts on oil that are set to expire maybe 6 months from now. Why? Because they can lock in their pricing now. In 6 months, if oil is up here, they make all that profit. Because they're going to sell it up there, the difference between what they bought it at and what they sold it at, as gas prices go up, as volatility in the Middle East increases, as our policy changes in the Middle East, that equals risk, that equals volatility, that equals higher oil prices. Okay, 30% next month. Again, we're in a rising trend here, and that's why they're winning. Structured as a commodities pool, so expect a K1 at tax time. Long-term holders will be taxed on any gains even if they didn't sell shares. So again, I own U.S. oil in my taxable account. I'm going to get a K1. Okay, so I'm taxed on my gains no matter what. So you have to understand that. Consult your tax advisor, consult your accountant, CPA, whatever, to know that going forward. Okay. Efficiency. Oops, where are we at here? Expense ratio, 0.79%. Futures, 55% in futures. US dollar, 36% in cash. Look at this. Right now, a US oil fund is carrying 36% cash. You know what they're waiting for? They're waiting for this. Okay. If you do not have money on the sidelines ready to invest after a major correction, you're doing yourself a disservice. Okay. 5% in Goldman Sachs, 3.58% in treasuries. I bet this goes up. I bet this goes up. Okay. It's just giving bids and asks. This again is talking about volume. Modern average volume, 5.1 million. What's it traded today? Oops. Average volume 6 million. It's already 4.75. All right. So if you don't care about taxes, you know, somebody could purchase this in their non-taxable account, their IRAs, their Roth IRAs, their 401ks, their rollovers, their Roth 401ks that are self-managed, etc. So you have opportunities that you can buy these things in retirement accounts as well. Volatility up, down, beta 1%. Given the cash ones, 8% front month contract, 20% in second month contract. That's actually not correct right now. And it's rolled over the course of 4 days. So every 4 days, it does it. This site's interesting only because it gives you, this is very complicated right now. I'm not going to really double into this, but collar strategies and covered call strategies. Covered call strategies say that, hey, if you own the ETF right now, hey, go write some options on it so that if you're wrong and oil prices go down, you're protected against loss in the amount of your investment inside the ETF as it trades kind of like a stock. But it's not a stock. It's an ETF, an exchange traded fund for which you pay 0.79%. Okay. But here's the interesting thing. So we'll cover I'm gonna cover something on costs because I know a lot of you out there are probably invested in mutual funds. Expense ratio 0.79% for this, right? If I type in the Vanguard 500, Vanguard 500 expense ratio, and I'm just clicking a random one. That was not a good one. This one might show it. Morningstar. Morningstar is the largest mutual fund research firm on the planet. What was our U.S. oil ETF expense ratio? 0.79%. Look at this. Let me make this bigger. .14%. Okay. But they're still charging for something. So I don't own any mutual funds. If I was going to buy the Vanguard S&P 500 index fund, I would buy something what's called a SPY, SPDR, spiders. Okay. That's just me. So back to U.S. oil. They've done a great job. They're front running the market. Look at that. Look at this. Look at this, folks. See the green? Getting brighter. So again, I don't even look at a chart. I even looked. My other monitor, this over here, is off to my right hand side. So when my eyes go over here, I'm looking at the S&P 500 on another screen, and I'm looking at the VIX. When I'm looking over here, this monitor is over on my on my left side, the one you're looking at right now with all of this. So this one I'm looking left, the bottom I'm looking right, and sometimes I'll actually look at you all watching me. So it is something that, when you're looking at U.S. oil, great opportunity there, great company, or a great managed limited partnership. This is site ETF.com. You can look at that. ETF University, that's going to teach you about these. And actually, you know what? Let me do this. ETF.com. We're going to come back to this at some point, but I'm going to bookmark it. No need for all that. And the reason I have that is now I can just go like this, open up a new tab, hit ETF.com. Ta-da. ETF University. Oh, top ETF performance. Let's go back to the homepage there. Basics, dictionary. Go through this stuff. Go to ETF.com, go to ETF University, click on ETF Education Center, and give yourself a primer and read up on ETFs. They're going to explain the basics of it. They're going to talk to you about the tax ramifications of ETFs. They're going to talk to you about K1s and what you will have to pay in capital gains if you hold it on a taxable side. They're going to talk to you about risk, fund flows, is money flowing in, is money flowing out, etc. But let's look at the movers on here. And I forget where I first learned about ETFs, where I did my research. This is way back in the day. But look at this. Top ETF performers. Amplify Transformational Data Sharing ETF. Block. What the heck is that? What's the other thing I talk about? Anybody? Bueller? I talk about precious metals. I talk about silver. I talk about platinum. I talk about palladium. I talk about rhodium. Okay? REMX. Wouldn't buy it here. Rare Metals Trust. Look at that chart. If you would have bought that in March, it was already climbing. But let's say it's back to the level where it was in March. Okay. Off of its high, $93 on its high, $93.84. REMX. REMX. I should start a new watch list for ETFs. And maybe I'll do that. Block was another one. Okay. I don't know what any of these do. Amplify Seymour Cannabis ETF. All right. Let's talk about the cannabis stocks. If you are in the cannabis stocks, let's say you are invested in, I don't know, Sundial. Okay. Sundial growers. We grow a lot of pot. Let me ask you a question. When the pandemic started here in the United States, because that's where I'm located, when they shut down and when all the universities closed up and all the states opened up the markets to marijuana, making it legal for people to produce, purchase, get taxed to the nth degree, and consume, all the cannabis stocks went up. I missed that boat. Reason why I missed that boat. Um, I don't participate in it. I don't know what it's like to ever be high on marijuana. I just never done it. It's legal in a lot of states. It's something that I don't know if I'll ever try. You hear about what is it, CBD or CBD oils or whatever. When I cut my dog's toenails, I bought some calming things for her, and I think there's a little bit of that in there. And then I cut her toenails because if you have a little pit bull mix, cutting nails can be fun. But she doesn't try and bite or anything like that. She's not aggressive, but she'll try and squirm around while you're cutting her nail because they just don't like that to be done to them. If I was in Sundial right now, what would I do? Okay. Well, depends. Do you have profit in it? Because guess what? The economy is opening back up again. There's a lot of companies out there that are no longer testing for marijuana, drug tested. Since, I won't tell you when, but every single position I've had, with the exception of being in high school, I think every single one I've been drug tested on. Every single one. And the corporations I used to work for, the last three major ones I've had company car or fully paid car allowance. The last company that I left, I was given a car allowance. They paid for all my insurance, and I got a gas card. That was nice. Don't have that anymore. And I'll talk about that in another video that you'll see posted up there, hopefully within the next couple days or so. So we've got another half an hour before Paul starts talking. We're going to keep streaming. We're going to listen to Paul. We'll end the Paul news conference, and then again, we're going to be back this afternoon. We'll be back at 2:30 Eastern Time, 11:30 Pacific, and we will be back for Power Hour, which is the last hour of trading. So from 12 to 1 Pacific, from 3 to 4 Eastern Time, and we'll pick up the Powder Hour. Powder. Snow. It's still snowing some places. So Sundial. Let's take a look at Sundial. So the weed stocks, as people go back to work, as the economy opens up, universities, colleges open up, all these kids they're going to have to start going to classes next fall. When they're actually in class, they're not going to be able to consume marijuana unless they're eating brownies, right? Or the edibles, which apparently are popular as well. Maybe I'll try those at some point. I don't know. Who knows? We'll see. Maybe we'll do a stream. I live in a state where it's legal. Maybe we'll do that. We'll do a stream where me, for the first time ever, eats an edible. Who knows? We'll see. Probably not, but you never know. Maybe if I ever get enough subscribers, we'll do that. Subscriber goal. There we go. Subscriber goal. Not 100. That's easy. You guys will have me doing that next week. You'll tell everybody, hey, I got this guy on the internet. He's a bit of a goofball, but he's got a couple brain cells up there. Not a lot, but a couple. And he says if he gets 100 subscribers, he'll get high on stream for the first time ever in his life. I won't do it for 100 subscribers. I don't even know if I'll do it for 1,000 subscribers or followers. Would I do it for 5,000? Maybe. We'll see. We can do updates on that too. So where's my pad? Hold on a second. If you don't have this, you should. It's a pad, and every time I get an idea, I write it down. So let's say if I can get a pen that works, I'm gonna write down hi for 5K follow. Okay. So if I got 5,000 subscribers, I'm not committing to that yet. I'm not committing to getting high if I get 5,000 followers. But and if I did, I would never smoke at all. It would be an edible type thing. So maybe we'll do that. That if I get 5,000 followers on Twitch and an equal amount of subscribers on YouTube, or maybe both, then I will do edibles or something on a stream or something like that. Just an idea. Let me know if you think that's a good or a funny idea. I think it's hilarious. I don't know if I'll do it. I don't have to worry about drug tests anymore. I'll go over that in another video. But that was a total segue into a different area. So let's segue back. Let's come back into it. And Sundial. So if I own Sundial right now, would I sell it? Would I buy it? Let me go back to the daily. And what I'm looking for on the daily is, this stock just came out in August, right? We can't even go back that far. We can only go out to the daily. And say it had a huge run up. So depending on where you bought it, a lot of people that bought it, the majority of people that still own it probably bought it somewhere in this range. Okay. You could have traded it. It's on a downtrend, isn't it? They report earnings. When do they report earnings? The company's losing money. So answer yourself this question. So without even looking at it first, if things are opening back up again, if kids are going to have to go back to college in the fall and actually attend classes versus remotely, and they can't get high anymore or eat their edibles in their dorm room, and they're not going to go to class high because they don't learn anything, or I have no idea. Maybe you learn better if you're high. I don't know. The consumption levels will probably dip. Total guess, I could be 100% wrong. My initial reaction tells me they may not be done yet. So let's look at earnings, what they do as far as earnings go. All right, so when you see down here, this is just a quick look. But when you see earnings over here, this is, estimated to make a profit of 14 cents. They lost $1. Lost. Estimated to make 6 cents. They lost 40 cents a share. They still have not made money yet. They're losing money. They're losing money in a market that could possibly go down further as the economies open back up, unless you believe that legalization will happen in more states. I think is it 19 states or something like that? Let's see. Marijuana legal. I can't even spell legal in how many states? Map. Here we go. Wondering what the law is in your state. No, just show me the map. Here we go. All right, look at this. Legalizes the dark, okay? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 states roughly, ballpark, right? Full legal. Medical and decriminalized, which means if they find you have marijuana in these states, they're like, who cares? We're not, look, we're going to confiscate it, but we're not going to charge you for anything, okay? Decriminalized completely. It's not illegal, but we're not going to charge you for it. Fully illegal, Idaho, Iowa, Nebraska, conservative states, okay? Tennessee, right? Alabama, South Carolina. A lot of people are saying, yeah, but if with the new administration, if they approve marijuana, if the Congress says it's legal now, then we could smoke it everywhere. No, you cannot. We are a republic. What that means is each state has its own laws and its own rights. If they federalize marijuana, all that means is that you may be able to consume it on federal property. Right now you cannot, which means national parks, U.S. Forest Service, BLM, by the way, stands for Bureau of Land Management. Does not stand for the organization. So if I type in blm.org, it's not taking me to a Lives Matter site. Whoop, what the heck? blm.gov. BLM.gov is a Bureau of Land Management. If you want cheap camping, also known as free camping, also known as boondocking, because here's what's going to happen in the summertime. As the markets open up, everybody's going to want to travel. BLM is free camping. Research it. As that happens, it's not going to change the consumption a whole lot, because those that want it, those that can get it, you know, if you live in Wyoming, they're going to go down to Colorado, they're going to buy their pot, and they're going to drive right back up to Wyoming. If they're in Idaho, they're going to go to Oregon, they're going to go to Washington, or they're going to go to Montana. They're going to buy their pot, they're going to drive back down to Idaho. If they're in Nebraska, they're going to go to Missouri, they're going to go to, if you're in Kansas, you're going to go to Nebraska, you're going to go to Colorado, you're going to go to Oklahoma, you're going to drive back up, and you're going to consume your pot. Pick a state, that's what's going to happen. Those that want to use it are going to be able to use it, okay? But as the economy opens back up, as more people go back to their jobs, they go back to, you know, that's probably why we see this consolidation phase down here. Short term, I still don't like it. If I had it at a loss, would I sell it? I don't think it's coming back, folks. I'm sorry. I just don't. I don't think it's going to go back to $32 or, you know, it's not going to go back up to that level. It's at $1.19. It's not going to go back up to $1.50 anytime soon. Here, we'll set an alert on it. What we say, $1.50, right? Hey, where's $1.50? Okay. I don't think it's going to happen. I could be 100% wrong. I probably am. It's going to go to the moon again. It's going to go to $3. You're going to be rich. Put all your money in it. Don't do it. Do not do it. My broker logged me out of my account. They don't like it when I leave them. All right. So again, what we're looking at, sundial long term, I don't like it. Short term, I don't like it. I just don't like it. I could be wrong. I think there's better opportunities. I think if you owned it right now, where's the money going? I'm telling you right now, this is where it's going. This is where the smart money is going. The smart money is going into energy right now. So again, every other website out there, every other streamer out there is running around, and they're talking, you know, they're talking about all of your Googles, your Facebooks, your Amazon, your Tesla's down 1.24%. I'm losing all the money I have. Sorry, but maybe you want to put your money into something else that's going to be going up in a down market. Better opportunities. I don't think I'd hold it. If I own Sundial right now, if I own Sundial, to be honest with you, I would have sold it. My little program would have said, hey, get out of that thing. It's a dog. It's losing money. If I would have done that, let's say I missed it on this candle, and I sold it over here, and this is a 1 hour candle, so I didn't get it till later on. I protected myself 11.4%. Winning and gaining in the stock market, especially if you do things like I do, like you day trade or you swing trade, and we'll talk about pattern day trading and things like that later on in another video. We've got 30 minutes until Powell starts talking. So again, we're staying on today. We're going to stay on past the time here. But, you know, I think that there's better opportunities that are available. And, yeah, I just believe that. So I don't like Sundial. I'm not invested in Sundial. I don't think I would own it. I'm not a fan of it right now. I think there's better opportunities out there. Your mileage may vary. Okay. All right, let's take a look at the markets. Let's get back into it. All right, Dow Jones Industrial Average. Enough. That's your teaching portion of the day. So we have Dow Jones Industrial Average is down 124 points. I do want to get into the. We'll put. I think the Fed. I need to get that ready to go here. And let me see if this works. What is this? The Wall Street Journal Jobs Summit. Complimentary online event March 4th. One second. There we go. So I don't know if this is going to be carried, that we can actually carry it. I wonder if over on YouTube. So I'm going to try and pick up this Powell speech. And let's see here. Powell speech live. Hey, did you all see the Tesla? Not the Tesla. Might as well call it the Tesla. But the I need to get my water. The SpaceX rocket yesterday. Kind of funny, but it successfully went up to its 10 kilometers. It did its roll, came back down, stuck the landing. It kind of bounced, and then it shivered there for a little bit, was leaning a little bit, and then it exploded. So the last 3 rockets went up have exploded. All right, let's see here. Hopefully we'll be able to I wonder if, let's see here. Yeah, so the website is telling me that it's going to show up on this job summit. I'm not going to register for a job summit. Not going to give them my information. So this watch live thing isn't necessarily a watch live that we'll be able to get into. All right, I'll be back in 1 second. Need to get some more water. Hydrate, hydrate, hydrate. Critical. All right, so yeah, I don't know how we're going to carry this. It's got a paywall. All right, let's see here. Complimentary online event. jeez. That's not the one I clicked. Wow. Holy cow. See, it's got these sessions, but let's see here. Sure. Okay. Let's see if this lets me. Oh, it says I have errors. Hold on. I hate scrolly stuff. So bear with me, folks. Trying to get this up. So maybe we can. Translations. Okay. All right, hold on a second here. Shoot. Okay, yeah, it's not going to let me in. I'm not going to give them all of my information to view this. It doesn't make sense to and hold on a second here. What the heck? All right. I'm trying to pull this up for y'all so that maybe we can watch this, but I don't know that we're going to be able to. Yeah.
Yeah.
So the best thing, I think, the only thing we're going to be able to do is possibly try and find a place that's kind of open, but I can't see anybody that has it that they're going to be able to stream it, unless they registered. And I'm not going to register for the Wall Street Journal Job Summit because I'm not interested in it. It will be interesting to see what he says, though. So right now, everything's back in the green again. Again, we've been seeing the volatility go down quite a bit, and so the S&P 500 is going up. We got some top news here. Let's take a look at that. So the Fed's Powell, that's already coming out here, even though he's going to talk in like 15 minutes. Fed's Powell likely to restate patient approach in public appearance. Senate boosts small state aid and COVID aid bill ahead of expected debate. Again, they've got a whole nother week before they have to pass this next stimulus. So they're going to delay, and they're going to pass it at the last minute, if at all. We'll see what happens. U.S. weekly jobless claims rise moderately. Labor market regaining footing. Contradictory terms there. So Dow Jones Industrial Average is now up 151. NASDAQ Composite is up 59 points, and the S&P 500 is up 20 points. So had a nice little recovery here on the day, which is nice to see, as we need that. So again, I think I can't find somebody that's going to be where it's going to be streaming. Again, this is a closed event unless you register for the event, and I'm not going to register for the event. All right, let's take a look at the markets. Cryptocurrencies, Bitcoin. Bitcoin is currently down $458, and Ethereum is up $21.75. Back up $15.89 again. This one's going to look for that $1,600 level. The GameStop meme stocks. AMC is down 45 cents. GameStop is down 47 cents. Rocket probably falling off the earth again. Let's see. Nope, it's still holding. Down 4 cents. Okay. So our chip stocks, AMD, still down 5 cents, but looking like it might get positive. Intel is up 28 cents. Microsoft up $4.63. Super good there. Nvidia is still down 69 cents, but recovered off their bottom of 490-ish, 495. Recovered back up to $511, but still down 97 cents on the day. Silver, precious metals. Silver's up 7 cents. Platinum up $7.56. And palladium up 22.5%, or 22.50, almost a 1% rise. Okay, so we've got about 15 minutes before Jerome Powell is scheduled to speak at this event. They're advertising that he was going to speak. He's going to speak. Doesn't look like anybody's going to carry it live though. So that's something that if I see somebody streaming it, maybe I can get it up on theirs and put it up there for us to watch. But right now it doesn't look like that's going to happen. So market turned, definitely getting better here. If we look at the Dow Jones Industrial Average, again, they're up 133 points, 31,403. S&P 500 is up 18.5 points. And the NASDAQ Composite is up 47 points. So yay. Let's see here. I want to put this one in here. All right, so movers on the day. Palantir up 7%. We'll just go through these. Palantir is up 7%. Nice run on them. $25 a share, or 25 to 35 currently trading at, so up $1.72 or so. Really good run for them. We already talked about oil, so crude oil is up another $3 a barrel. So U.S. oil is up 5%, up $2. Cinemark, movie theater chain, up 83 cents. Chevron up $3.61. Microsoft up $4, and this is by percentage the gain. Okay, 1.88% on Microsoft, Ethereum, Palladium, Platinum, SPX, SPY, Dow Jones, Intel, and now we're getting close to those in the red. Even Ford, look at our Ford up 3 cents today. So again, that's had another great run. Silver, Oshkosh, and then Nvidia about to make the turn, but they're still down $1. And then looking at what's negative on the day, hey, there we go. KMPH, it's the pharmaceutical everybody was looking at the other day, and down another 20%. So it went from $22 down to $10. After they reported that the FDA approved their drug Asteris for ADHD. A pharmaceutical company, AMC Theaters, Workhorse, Tesla's down 2%. If you look at the rest of the EV makers, almost all of them have turned towards a negative. NIO is down. Fuel cell down. So you got a lot of them there. Okay. Give me a moment. All right, so SPX. Back above it, it's actually recovered pretty decently. So Green Day, again, Jerome Chairman Powell is going to be speaking in an event shortly. We probably will not be able to stream that unless I can. I see nobody really up on that's going to be carrying this thing. If I try and click live, and if I just click in Jerome Powell, and nothing comes up. Okay. Jerome Powell speaks. Maybe Bloomberg, maybe CNBC. You know what? Let's see here. And I'm seeing if they're going to carry this or not. I don't know if yeah, this one doesn't look right. All right. I'm still looking for it, folks. I don't see anybody carrying it. Maybe CNBC? Let's see. Oh, where did it put it? Uh-oh. Well, that didn't work, did it? Hold on. Okay. It's not going to allow me to. Yeah, I don't think I can drag this to another monitor. I'm trying to see is if I can. Well, maybe this way. Okay. So this isn't giving you any personal information, but this is the trading platform I use. It's called Street Smart Edge, and I'm going to launch into CNBC, and we're going to see if they're going to carry this or not. They're in a commercial break. And see how that looks on the screen. Okay. Actually, I believe
a vinyl and digital download for a token priced at $50. The release will open for 2 weeks starting tomorrow, after which no more will be made. Dee, you mentioned this at the top of the hour. When we talk about these things in theory.
All right, so we'll see. I don't know if they're going to carry Jerome Powell or not. If they do, we'll pause this. If they do, we'll carry it. But he's supposed to speak here at any moment. Right now, the S&P is up. You see up here on my things, the Dow is up 139, Nasdaq Composite up 1799, and the S&P 500 is up 16.71. This is interesting what they're talking about right now. When they're talking about kings of crypto and they're talking about NFTs, which are called non-fungible tokens, we'll see what happens here.
Committee this hour, and joining me today, Josh Brown, Jim Leventhal, John Najarian, and Tiffany McGee, the CEO and CIO at Pivotal Advisors. Let's go to the wall. So much focus, obviously, on tech these days. NASDAQ and NASDAQ 100.
Yeah, I don't think that they're going to carry this.
NASDAQ has recently gone positive, though, by...
Let's see here. So you can find anybody doing it. If I go live, yeah, I don't think they're going to show this, folks. We'll leave it here. If I see him come up, we'll we can certainly take a look at it. And because I've got this many windows open, I'm trying to search on other YouTube videos. Hopefully my stream isn't lagging, but we'll see. It might be. And yeah, they're not showing anything on this one. So let's yeah, he's about to start talking. Nobody seems to be carrying it live though. Let's see.
I don't want a job, I'm a trader.
All right. Yeah, there's the only ones I see that are streaming it are ones that registered for it and gave all their information to the Wall Street Journal. Look, anytime somebody tells you something free, guess what? You are the product. They are selling you and your information and your data so that you can get something for free. Nothing is for free. Everybody has an agenda, and we will. Yeah, he's about to come on, but see if anybody has him up. Not seeing it. But the S&P is up. If you look over here, you have the Dow Jones Industrial Average is up 167. NASDAQ Composite is up 40, and the S&P is up 21. And this, sometimes I have, 30-year fix, look, back above 3%. Okay, so I want to pull this back down here. Oops, hey, come here. And if it comes up and they end up showing them, we'll jump back into it. But we don't need to. I don't need to know, other than yeah, we'll see. I don't think anybody's got it. I'm not going to register for Wall Street Journal website to just to listen to what Powell is going to say. I can't believe that the Federal Reserve Board won't offer an audio of it at all. You would think they would. Still looking. We have other people speaking, I guess, too. So this session has like 5 different speakers. So I'm not sure what order they're going to go in, and we'll see if if they pull them up on CNBC, we'll stream it for you. Not sure they will. So maybe we'll take a break, but we'll see. So now they're starting it. What's up with the economy? Let's see here. Okay.
Good afternoon. I'd like to welcome our audiences on Twitter and the WSJ homepage. And of course, thank you to Chair Powell for spending time with us today. We're really excited to have you join us.
It's great to be here, Nick.
So to start, since December,
Say a word, run it.
All right, let's see here.
Thanks to more vaccinations and the prospect of a lot more government spending, how have these developments changed your outlook for the economy and the labor market?
Nick, thanks. It's great to be here today. And if you'll permit me, I actually want to start by noting that today is the birthday of Alice Rivlin, who was one of the real pioneers for women in economics and public policy. Alice
Always
was
pay
90
homage.
years old today.
Always
She
pay
was vice
homage.
chair of the Fed, founding head of the Congressional Budget Office, and held many other roles. A great person and a great leader, and I wanted to honor her today here on her birthday. How do I know this, you may wonder? And the reason is because she was a friend.
It's great to be here today. And if you'll permit me, I actually want to start by noting that today is the birthday of Alice Rivlin, who was one.
All right, let's see if this works. Okay, buffering.
The real pioneers for women in economics and public policy. Alice would have been 90 years old today. She was vice chair of the Fed, founding head of the Congressional Budget Office, and held many other roles. A great person and a great leader, and I wanted to honor her today here on her birthday. How do I know this, you may wonder? And the reason is because she was a friend and she shared a birthday with my mother, who would have been 95 today. Another person of, two women actually, of integrity, intellect, and character. So if you permit me, I will start that way. And now I will respond to your question. So let me start the answer by saying that Congress has given us two goals: maximum employment and price stability, and we have tools to achieve those. We're strongly committed to achieving them. Before the pandemic hit, we were very close to those goals. Unemployment was at a 50-year low, jobs were plentiful, wages were moving up, and inflation was also running close to, but a bit below our 2% objective. That was a year ago now. Let's look at where we are today. The economy began to recover last May from the very sharp downturn at the beginning of the pandemic and made good progress through the beginning of the fall, let's say. And then progress slowed sharply overall with the winter COVID spike, which reduced job creation for the last 3 months through January to about 29,000 a month, which is a drop in the bucket for an economy our size. So today, we're still a long way from our goals of maximum employment and inflation averaging 2% over time. More recently, as you point out, we've got rising vaccination, we've got cases at lower levels, we've got strong support from fiscal and monetary policy, and while there's still risks, there's good reason to expect job creation to pick up in coming months. And we need that because we're still 10 million jobs short of where we were. 10 million fewer people are working than were working when the pandemic hit. So it's a lot of ground we have to cover. And those people are mostly in areas that are directly affected by the pandemic. That's service industries, public-facing jobs. I'll also mention inflation, since that's the other side of our mandate. We seek inflation that averages 2% over time, and we want that to happen because we want it to average 2% over time. We want inflation expectations to be anchored at 2%, and that's really the goal. So right now, inflation is running below 2%, and it's done so since the pandemic arrived. We do expect that as the economy reopens and hopefully picks up, we'll see inflation move up.
There we go.
Base effects, which means just
that comment right there is going to cause the market to go down.
Out of the 12-month.
That comment right there. Watch this. The VIX is going to go up. S&P 500 is going to drop based on he just said he expects inflation to go up.
Pressure on prices. The real question is how large those effects will be and whether they will be sustained or more transitory. And I'll just say that for several decades, the U.S. and the world really economy have been in a low inflation world. And low inflation is what people expect
VIX up.
here and around the world.
Market's going to turn south. He just killed the market, folks. That's what he just did.
Increases in prices would be repeated.
He just killed the market.
And we think it's unlikely that these deeply ingrained low inflation expectations would suddenly change.
Here's your S&P 500.
Effects like the ones I described
Let me go back up here.
One-time effects as the one-time effects of the fiscal booth fade. We have the tools to assure that longer-run inflation expectations are well anchored at 2%, not materially above or below, and we'll use those tools to achieve that end. So that's my thinking on the economy.
So I'll get to inflation in a second, but on employment, when people are vaccinated, when they're able to go travel and feel comfortable seeing their family again, there could be a big pickup in activity. Does that mean employment could get back to where it was before the pandemic sooner than you previously thought?
Well, the answer is I would hope so. So let me tell you how we define maximum employment. People focus on the unemployment rate, but it's really much broader than that, because if you haven't looked for a job in the last 4 weeks, then you're not counted as unemployed. You're counted as out of the labor force. So if you look at those who have left the labor force since the pandemic, and also those who are unemployed, then you get a very large number of people who are around the edges of the labor market. And it should be thought of as generally people who want to go back to work. It will take some time to get back to maximum employment. It took us many years to get there before, and that'll really just depend on how strongly the economy picks up once we do get past the pandemic, and once economic activity picks up and hiring picks up. Again, there's a lot of ground to cover to get back to what I would call maximum employment. We want to see wages moving up. We'd want to see that the gains in employment are broad-based, and that different demographic groups were experiencing it. So we have a high standard for identifying what maximum employment is, and we think it'll take some time to get there. But that is exactly the state we're trying to achieve, and we're trying to achieve it, as quickly as we possibly can.
So just because we hit 4% unemployment, for example, if labor force participation was still low relative to where it was last February, does that mean we're not at maximum employment?
Yes, I mean we'll look overall at a range of indicators, and certainly the unemployment rate and the labor force.
So as he's talking, you're seeing an effect on the market that
it's actually even.
He said one word,
certainly
one sentence,
we've had the sharpest,
and it caused the entire market to go down. He said he expects to see higher inflation.
Just means that there are quite a few people who are technically out of the labor force, but were working in February. So some of them will have retired, but the vast bulk of them actually want to go back to work, but they're not currently looking because perhaps the business where they worked is still temporarily closed or permanently closed. So the answer is yes. 4% would be a nice unemployment rate to get to, but it'll take more than that to get to maximum employment.
And do you think we could get there this year?
No. I think that's highly unlikely. I think we have significant ground to cover. If you think about it, if you add back in a broader measure of unemployment is about 10 million people, I'm hopeful that we can begin to make good progress again, that hiring will pick up. So as I mentioned, hiring was strong during much of last year after the pandemic, after the critical phase of the pandemic in March and April. But it really slowed down over the winter with a spike in COVID cases. And
so as we're listening to this, we have the Dow Jones still up 83 points. S&P is up 8, but the NASDAQ went down 30 points.
Increase hasn't happened yet. So I think it's not at all likely that it would reach maximum employment this year. I think it's going to take some time to get there.
That's going to cause it to dip
inflation for a second. Between the $900 billion that Congress approved around Christmas and then this $1.9 trillion package Congress is looking at right now, that's some serious spending. And the market has been pushing up longer-term interest rates, maybe because it seems to anticipate an unwelcome increase in inflation. Is the market wrong?
That feels so good.
Well, is the market wrong? That's a pretty broad question, I would say. Maybe to be a little more specific, let me talk about the sort of market pricing, I think is what you're really asking about. So
listen,
in terms of the bond market, so you're right, bond market rates moved up. And as far as that is concerned, a number of factors are factored into it. But from our perspective, we monitor a broad range of financial conditions, and we think that we're a long way from our goals. We think it's important that financial conditions support the achievement of those goals. And I would be concerned by disorderly conditions in markets or a persistent tightening in financial conditions that threatens the achievement of our goals. I would be concerned if those things were to happen. In terms of the other question tends to be markets reflect an estimate of when we would raise interest rates. And so let me talk about that. That's the other question. So the question is, what would it take for us to want to raise interest rates? Right now, our policy rate is effectively at zero. So we have a new framework, and we're strongly committed to implementing that framework, and we have guidance out to implement that framework. As I mentioned, with rising vaccination and other things happening, fiscal policy support, there's good reason to think that the outlook is becoming more positive at the margin. And in coming months, we could see spending and job creation picking up. So let me talk about the guidance. And by the way, the guidance is always it's outcome based. It's not date based. So we never say, hey, we're going to do this in 18 months or 24 months. It's always when these conditions are fulfilled. So for asset purchases, as you're aware, we say that they'll continue at least at the current level until we achieve substantial further progress toward our goals. That's actual progress, not forecast progress. And as I mentioned, there's good reason to think we'll begin to make more progress soon. But even if that happens, as now seems likely, it will take some time to achieve substantial further progress. For interest rates, to raise interest rates above zero, very simply, we said we'd want to see labor market conditions consistent with our assessment of maximum employment, and that means all of the things that we talked about. We'd want to see inflation sustainably at 2%, and we want to be on track to have inflation run moderately above 2%. So these are highly desirable outcomes that that would represent an economy that's very far along the road to recovery. And there's just a lot of ground to cover before we get to that. The last thing I'll say is this, and I want to be clear about this. If we do see, as I mentioned, if we do see what we believe is likely a transitory increase in inflation, where longer-term inflation expectations are broadly stable at levels consistent with our framework and goals, I expect that we will be patient.
So there's a lot there. Thank you for that.
You just said if inflation goes up,
the question has
they're not going to do anything about it.
Bond yields been consistent?
In other words, they want to sacrifice the stock market to save the bond market. There's more money in the bond market than there is a stock market. That's what he just said.
You know, I don't want to be the judge of a particular level of one interest rate among many, one asset price, if you will, among any. Our new for your the people at your conference benefit. Our new framework says that we will seek inflation that runs moderately above 2% for some time after we've had a shortfall of inflation. And it also says it commits us to not raise interest rates just because the labor market gets strong. And those things, I think, will be good for the labor market over time. Again, I would just say, as it relates to the bond market, I'd be concerned by disorderly conditions in markets or by a persistent tightening in financial conditions broadly that threatens the achievement of our goals.
And I understand why you wouldn't want to comment on a specific level of rates, even if the level of rates isn't a problem. Was the speed with which real rates adjusted over the last week problematic in your view?
It's important.
You know, it was something that was notable and caught my attention. But again, it's a broad range of financial conditions that we're looking at, and that's really the key. It's many things, and we want to see, and would be concerned if we didn't see disorderly conditions, orderly conditions in markets, and we don't want to see a persistent tightening in broader financial conditions. That's really the test. It's not appropriate to isolate one particular interest rate or price. It's more of a broader assessment that we make.
I guess what I'm wondering is the market now believes the Fed will raise rates earlier and faster than it thought a week ago. Are you saying that's consistent with your outcome-based policy guidance and with your new framework?
It's going to depend entirely on the path of the economy. So I laid out the conditions upon which we would consider raising interest rates, and that's labor market conditions that are consistent with maximum employment, which is
he's driving this market down, folks.
Big thing to get to, and it will take some time to get there, right? Inflation sustainably at 2% and inflation on track to run moderately above 2% for some time. So,
most important thing he said was if inflation comes in, they're going to be patient. What that means is they're going to sacrifice the stock market to save the bond market.
The timing will depend entirely on on the fulfillment of those conditions. And as I said again, if I've told you that we think we're likely to see inflation move up during the course of this year through really two things. First, the base effects I mentioned, but also just kind of reopening effects where businesses will be potentially hit by a lot of demand as the economy recovers, which is a good thing. But you could see bottlenecks, you could see prices moving up. We're inclined to see those as transient. And there's a difference between a one-time surge in prices and ongoing inflation. Ongoing inflation, where prices go up year after year after year, tends to happen when people
all markets are now red.
They believe that's what will
Dow
happen.
Jones down
And
15,
no
NASDAQ down 70, S&P
the
down
central
3.
bank, frankly, will prevent that from happening. So, as I've said, the key thing is to keep longer run inflation expectations anchored at 2%. If that happens, then a transient increase in inflation will not affect inflation over a longer period. And we intend to use our tools to keep inflation expectations anchored at 2%, which gives us the ability to do all of the things we do when the economy is weak.
It could take months, though, for the data to contradict or validate this narrative about transient inflation. And obviously, investors are twitchy right now. Do you think your guidance is too vague right now to be properly understood by investors?
I'm trying to make it as clear as possible. And I went through, the guidance. I think the guidance for the tapering asset purchases has an element of judgment in it. But I've also said that we will, well in advance of any decision to consider tapering asset purchases, we'll communicate about our sense of progress towards substantial further toward the goals.
He's got above his right shoulder.
Goals. So
Federal Reserve Bulletin.
Surprise people with that. And as far as the
1996,
the rate liftoff guidance, it's pretty specific. And as I said, it will take some time to get there. If you think about it, you've got to have a very strong labor market and inflation performing in line with.
Anyone notice that his clock
it's a picture
doesn't
of an economy that is all but fully recovered. So
got a broken clock,
and the sooner that happens, the
better. What that means, right?
I would say realistically, that's going to take some time.
Broken clock is right, correct.
And as we
twice
sit
a day.
here today, do you think the hope of a brighter outlook you've discussed here might lead to substantial further progress being achieved this year?
He's not saying that there's a brighter outlook.
Again, I've been so far been able to not reduce it to an estimate of time. I mean, that will come, I think, when we can see that. Right now, we haven't been making much progress. I mentioned 29,000 jobs per month for the months of November, December, and January. So, and spending was maybe a little better than that, but in the job market, you saw a real slowdown in job creation. That wouldn't get you to maximum employment anytime soon. That's just not enough. So, I do expect, and many forecasters expect, that there'll be a pickup in job creation. We'll have to assess that when it comes. I don't want to be making, but again, I think realistically though, it's March, and we're going to start, presumably in the next couple of months, we'll start to see stronger employment, and we're going to want to see substantial further progress in both maximum employment and stable prices. That's going to take some time. It just will take some time because you've had 3 months now where you didn't make much progress. So we've got to get going and start making it again. And for us to assess that and signal forward.
So what changed from 3 months ago? Anybody? Bueller?
As you noted, the Fed is buying
New
$120
administration.
billion per month in Treasury and mortgage securities. You've been saying
this right here
that your asset purchases are designed to support market functioning. Have you seen anything in the Treasury?
The Fed is buying assets. They're not supposed to.
Need to lengthen the maturity profile of your purchases?
We think our current policy stance is appropriate. As I mentioned, the federal funds rate is at the effective lower bound, which is our technical name for zero or close to zero. We provided really strong guidance about the conditions we need to see before we considered raising it. We're buying $120 billion in treasuries and mortgage-backed securities across the curve, and we'll continue at least at that pace until we see substantial progress toward our goals. Financial conditions are highly accommodative, and that's appropriate given the ground that the economy has to cover.
it's always the case that if conditions do change materially, the committee is prepared to use the tools that it has to foster achievement of its goals.
Well, and if there were some kind of rate move that you felt represented a threat to your outlook, what would you do to address it?
Well, that's a sort of hypothetical situation. You know, we would use our tools. It's hard to say in the abstract, but we would use our tools as appropriate to foster the achievement of our goals.
There's been some discussion in recent
All bad
days.
news.
It's gotten a lot of attention. The idea of selling bills or letting bills run off of your portfolio to address a collateral squeeze in money markets. Is that something you think needs to be considered at this time?
Nick, you know, as I said, I wouldn't want to speculate. Really, I'll just say we'll if conditions do change materially, we'll be prepared to use our tools in whatever way is appropriate at that time to foster the achievement of our goals.
I know a lot
ago, when we had low employment, we had high inflation. So when the job market got good and tight, employers were, you know, actively seeking people and there were plenty of jobs, inflation would be moving up, and therefore the central bank, the Fed, would be raising interest rates to cool off the economy. And I would say 50 years ago that was appropriate because there was this tight connection between unemployment and inflation. More recently, though, that I think the Fed established its credibility several decades ago on inflation, and since that time, the connection between, you know, having a lot of people out of work and and inflation under control has gotten very, very weak. So our new framework very explicitly takes that takes that in, that new learning, that new understanding, and says that we won't raise the interest rates to cool down the economy just because unemployment gets lower, just because employment gets high. We're going to wait to see signs of actual inflation or the appearance of other risks that could threaten achievement of our goals. And we've seen that the economy can sustain very low levels of unemployment without inflation. So what does that mean for job seekers? It should mean that you know, the job market will be stronger over time. We also saw the terrific social benefits of a very strong job market during 2018, 19, and the early part of 20. We saw workers at the low end of the wage scale getting the biggest increases. We saw labor force participation moving up. So people who might have given up on finding a job found a job, and people at the margins of society, maybe coming out of prison, things like that, got jobs. And there was really a lot to like about
Did he just talk about the getting out of prison employment rate?
We're really committed to getting back to a very strong labor market. And
keep in mind, this is a guy with a broken clock for his bookcase.
The inflation dynamics that we have give us the ability to do that, but it does require that we remain committed to keeping inflation expectations anchored at 2%, and we will do that.
Of course, some prominent economists in the last couple of weeks, as you know, Larry Summers, Olivier Blanchard, are saying that policymakers have maybe grown too quick to conclude from recent decades that low unemployment is no longer inflationary. Are they right to worry about this right now?
Well, so many people, particularly people who are now entering the job market, will not have lived through high inflation. And high inflation is a very bad state of affairs, and it hurts people the most on fixed incomes and lower incomes who have less wealth to draw upon. So inflation was very high when I was in college and coming into the job market. So it's really not something we want. But I would say, you know, at the Fed, we are well aware of the history and how it happened, and not going to allow it to happen again. It was a situation where the Fed didn't step in when it should have, when inflation pressures were building. Not at all the current situation. Inflation is currently running below 2%. It's running at 1.5%.
And they want it
higher.
higher.
Very mindful of what happened in really the 1960s and 1970s.
He said they want inflation above
and, you know,
2 to
determined
2.5%.
not to repeat that mistake. But you have to differentiate, though, between one-time price effects, such as things that happen around the reopening of an economy, not something we have much experience with, And just the sort of, when I say base effects, it's a technical term. You look through that, it's not really signaling anything about inflation. So I mean, we're very mindful, and I think it's a constructive thing for people to point out potential risks. It's always constructive. I always want to hear that. But I do think it's more likely that what happens in the next year or so is going to amount to prices moving up, but not staying up, and certainly not staying up to the point where they would move inflation expectations materially above 2%. That would take, the public would have to come to believe that that's the new policy, that's the new reality, and I really don't think that a couple of quarters of prices, or even more than that, but prices being above 2%. Would change the psychology, particularly in a world where inflation has been the problem for the last decade in all of the major advanced economy countries. They've been facing low inflation because of these global disinflationary pressures, which haven't gone away, and they're not going to go away overnight.
So it's been a year really since we began to face this pandemic, at least in the United States. You announced your first of 2 emergency rate cuts a year ago yesterday. And so as we mark that anniversary, what are 1 or 2 of the most important lessons you think we've learned from this economic crisis?
Yeah, we've been thinking about that a lot. We're sort of going into the anniversary of that extraordinary period. So the first thing is, and we really implemented something that we learned from in the last crisis, the global financial crisis, and that is that we needed to move quickly and powerfully with our tools and not hesitate. And we really did that this time, and so did Congress, by the way. The CARES Act passed within a month, really, of the pandemic starting to get going. We had very strong fiscal policy in the original CARES Act, unanimously passed by Congress, and we cut rates twice. We started asset purchases to support market function at an unprecedented level.
So what's changed?
We also announced the opening and opened facilities to replace, to assure the flow of credit to households, businesses, and municipalities in the country. All of those things were in place very quickly. So thing one is, when you have a real crisis, attack quickly and don't hold back. Thing two is, don't stop until the job is done. So there's a real sense that.
Did he just do a thing one and thing two? He did.
Really, fiscal policy pulled back and became tight, and it led to a very long, slow recovery. So we're committed to using our tools and staying on the playing field with our tools until the job is really done. We're committed to that, and Congress, of course, has come with quite strong fiscal policy, and so I think we're in. If you look around, we're in the place we're in now. There's still a lot of pain out there, and more than 500,000 people have lost their lives to the pandemic. But compared to the economic scenarios that we were contemplating a year ago, this is, it's good to be where we are, and particularly with the vaccines now. No one thought we'd have vaccines within a year, less than a year. And now vaccination is moving at a good pace. We really are looking, if we can just decisively end the pandemic, we could get back to normal and avoid a lot of the longer term damage that we were concerned about happening. But we haven't done it yet. We haven't succeeded in this yet, but we're right there. I think there's, if we can, the next couple of months will be very important on the pandemic. If we can keep making progress, that's what will help the economy more than anything.
And of course, last year you talked a lot about the need for fiscal policy, that is government spending to engage. It came through at the end of the year with $900 billion. Now it looks like we may get something, a few shades less than $2 trillion. Is this going to be too much, too fast?
It's not our job. Our job as assigned by Congress is to use our tools to foster the achievement of maximum employment and price stability. We're not the Congressional Budget Office. We don't make assessments of, and we don't play a role. We're not up on Congress testifying on this or that fiscal policy. We're not in the discussions or the negotiations. It's just not our job. So I wouldn't comment on this particular fiscal policy. It's just not. It's just, we have this precious independence the Fed does from political interference in our decisions, and the other side of that is stick to your job, stick to your knitting, which we try to do.
Yes, we've heard that from you a few times before. Since we are here talking about jobs and careers, you said recently that you love your job, and your term as chair is up in less than a year. Would you like to serve a second term if it was offered?
I have nothing for you on that today. My focus is on, the current challenges that we face.
He's not going to work for
the
current administration. He disagrees with everything they're doing.
We have a lot of ground left to cover, and good reason for optimism. I mean, the last maybe lesson would be, even in terrible times, try to take counsel from your hopes as well as your fears, because
that is absolutely going to tank.
March and
Watch
April
this.
Of last year, I mean,
watch these.
You saw the way the people responded, and
this is going to turn and go whoop. This is going to go
the
whoop.
response, and then where we are, it's really, we should never sell ourselves short. And so I would just point out that it's good to be optimistic, but nothing new for you on that topic.
Well, on that note, we look forward to the day when we're able to have events like this in person again. But notwithstanding that, we're honored to have had you join us virtually today. So thank you, Chair Powell, for a great conversation.
All right.
Thank you, Nick.
And also thanks to our audience following online at WSJ.com and on Twitter.
All right. Okay, so basically what he said was, and the markets are going down because of that. And I'll pull up a 4-chart index and show you. Apologize for the lag here on the video. Okay, so you have the Dow Jones Industrial Average. He started speaking right here. Tank, 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 tank. He caused all three indexes to go down. So currently the Dow is down 84. The S&P 500 is down 15 points, and the NASDAQ is down 140. And the volatility has gone up. So one person's words can absolutely cause a market to change, and not necessarily for the better. So we'll see if this turns. We're going to be back in another little less than 2 hours. So we're going to take a break for now. I want to thank you all for tuning in, and we'll see you back here in a couple hours. Thanks and bye.